CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 4th day of February, 2014. What a difference a day makes. Let's take a quick look at the numbers. Dow up 97, S&P up 15, NASDAQ up 44, crude's up $1 and change, and gold is off $9. Now, after yesterday's rout, or last week's rout, or the last couple days' rout, it's going to take some time for these markets to recover. But this, you see on my screen here, is the S&P 500 E-mini futures. This is an hourly chart. This, my friend, looks to me like a bottoming pattern. Michael can talk about that. He talks about it a lot each day in the live trading room. We're going to move quickly today. We're going to do things a little bit differently. I won't linger too long over the charts here because we have a very special guest who's going to be with us today. Ms. Kathy Lien. And dear, I do hope I pronounced that properly. Let me share with you briefly. This is Kathy. In fact, if you, as Michael is going through the recap today, if you would like to take a peek, stand by. In the chat box, I'm going to put a link. You can go right there. You know, I have an even better link for you. Well, I don't know if it's better, but it's pretty good. Hang on a second. I'm going to give you that one. And here we go. Send to all. And I'll even put it in the other little chat box. Turn it into a hyperlink for you so you can just click it and you don't have to do all that copying and pasting and whatnot. All right? Very good. So Kathy will be with us top of the hour. So I'm going to move quickly. For those of you that are here today for the very first time, maybe you came specifically to hear Kathy and maybe ask a question or two. In fact, we do encourage you to participate in the discussion. If you're unable to see my chart, if all you can hear is the sound of my voice and you want to participate in the discussion, then go to the home page of CFRN.net. On the right-hand side of the page, click the big microphone. That'll take you to a page. Follow those instructions. You'll be registered for the entire month. Okay? You'll be good right up through February 28th. We all have to register once a month. It takes you 30 seconds, and then, again, you can hear us, see the charts, and participate in the discussion. All right. We had only one tweet last night, or trade alert, if you will. S&P 500 E-mini futures. Let me just show you exactly what it was. Right here. Special alert. I don't think that was it. Let's have another go. There we go. Okay. Okay, this was yesterday afternoon, 1:32 p.m. That would have been Mountain Standard. Okay. ESH4, not calling a bottom, but I do see a window of opportunity to be long the SP 500 E-mini futures from 1745 to 1747, if the opportunity presents. Now, this is a trend down day, and some people would call any long trade a fool's game. I won't argue that point. Just sharing with you what I see. That's all. An opportunity and a certainty orbit different universes. However you trade it, though, always use a hard stop. Of that, I am certain. If you prefer slightly more confirmation, you could adjust the numbers to read 146 to 148. Okay? Because those 2 points right there in the S&P, that gives us our daily goal. And as you can see, 1745 to 1747, that worked out a couple times. And even the 46 to 48 has worked out as well. And the market does appear that it wants to recover. If we look at just the last leg of the journey, right here on the hourly chart, we can see that we have just hit the 38% retracement. Okay? And so to have a little bit of resistance here, as we're seeing, see it hit that thing right to the tick, spiked it, it's having some trouble getting through it. It's possible we come back, test this 45. We have that belief that important prices, important areas are almost always tested. So we'll keep an eye on that throughout the program, see how it plays out. Let's go right now to our good word for the day, and then we're going to jump right over to Michael and let him take care of the recap. He'll go over everything that happened today in our live trading room. He'll also tell you how you can be a part of the live trading room. Our good word for the day comes from Deuteronomy. It says, I have set before you life and death, the blessing and the curse. So choose life in order that you may live. It sounds like good advice. Deuteronomy 30:19. History buffs enjoy playing a little game called alternative history. Entire books have been written exploring such questions as, what if the British had won the Revolutionary War? Or what if the Japanese had been repelled at Pearl Harbor? One of my favorites, what if the security guard had not noticed the tape left on a door by the Watergate burglars? When playing this game, we soon see how one seemingly small event can domino into hundreds of subsequent events, eventually changing the course of human history quite dramatically. Think of the consequences of some of the biblical events. What would have been the consequences if Abraham had simply trusted God, not fathered Ishmael, and Isaac had been his firstborn son? Would the Islamic faith have never existed? What would be the current political situation in the Middle East? Would 9/11 have even occurred? Perhaps we can look to Harry Truman for the answer to some of these questions. When he was asked, what if the South had won the Civil War? He curtly replied, they didn't. Still, it is interesting to ponder the long-term consequences of man's poor use of his free will. Kind of makes you pause and reflect on the long-term effects of your own day-to-day decisions. And that's our good word for the day. And with that, we're going to go to Michael and our daily recap.
All right.
Are you ready, my friend?
I am. Let me
We have a good day today?
Yeah, we had a good day. Every day's a good day, you know.
How many trades did it take?
Today it took... What did I type? It looks like
I don't know.
3 trades. It looks like 3 trades, but I thought it was 4 trades.
Well, I was there. I rang the bell. I just wasn't keeping count.
Yeah, I know. And where I wrote it down, it seems to... No, it was 3 trades. 3 trades, 15 minutes. That's
3
what it
trades, 15 minutes. We hit our daily goal.
Yep.
We don't do that, guys, to brag. We do it so that it can be entered into evidence, right? Yeah, there's so many things floating around about trading and great ideas and concepts and whatnots, but unless you can actually, tie it down and firm it up, then it remains just a kind of an idea, a thought. So we've decided to make this thing concrete, if you will, rather than say, wouldn't it be nice if a person could do this, that, or something else. We've set about doing it, and we actually record it day after day after day. What do we have now? We have 2.5 years of daily recaps out on our website.
Something like that.
Something like that.
It's a lot of recaps. Yeah.
A lot of recaps. Yeah, you won't get through them all today, friend. But anyway, let me go ahead and mute myself. I don't see the chart yet.
And I'm getting them over here just now.
Okay.
I had to move some things around.
Reminder, guys, Kathy coming up top of the hour.
There.
Showbiz talk from 1 o'clock Eastern.
Yeah. It's 45 minutes. 45 minutes.
Yeah.
Roughly.
And David's going to pop as soon as Michael is done with the recap. David from PageTrader.com, he's going to go ahead and pop right on in, and we'll chat a little bit about the different markets. And again, I encourage all of you to click that link on Kathy's profile, and if you have any questions at all about, Forex, currency trading, I don't think you're going to find anybody better to answer the question. So, Michael, it's all yours.
All right. Let me start the recording then. All right. Here we go. All right. Good afternoon, everyone. Today is Tuesday, the 4th day of February 2014. Today, let's just go over the results. We lost our first trade in the soybeans, and we took 2 more trades in the soybeans, and we got back to break even with those 2 trades. So we ended up break even on the soybeans. On the Russell, we were plus 10 ticks. On the Russell, we were plus 10 ticks. On natural gas, we were plus 6 ticks. On crude oil, we're minus 3, and on gold, we were plus 16. On the month so far, we're up $655 a contract. So if we keep going at this rate, we should exceed last month's $6,027.50 a contract. This morning it took us 15 minutes and 3 trades to get to $100 per contract. That is our daily goal, $100 per contract. We took a total of 18 trades in the live trading room. All right, so we're up $655 gross on the month. We've taken 34 trades. If you apply an $8 commission to every one of those 34 trades, you would be up a net of $383 per contract in the 2 days. If you apply a $5 commission to the same 34 trades, you would be up a net of $485 per contract. All right, that is where we stand on the month of January. On the year, I didn't finish the spreadsheet on that side. Anyway, you can see we'd be up $6,600 or something like that. I'm sliding this off now, and I'm going to tell you guys how to get into the free trial. If you have not gotten into the free trial in the past, this will be your direction. All right. If you've not taken a free trial with us, go to www.cfrn.net. Right up there, just like that. CFRN.net. And over here in the right-hand column, just put your name and your email address in there, and click on register for a free trial. When you do that, we'll be sent a link. That link is a confirmation link. You're going to have to click on that before we even know you've taken it. Once you click on it, we'll know that you've taken the free trial. You'll be sent a couple of emails. One will give you a whole bunch of information about what we do, what we've done, have some links in it to get into the live trading room for 5 luxurious business days. Have some videos in it about every indicator individually, the indicators that we actually use. We don't use all of them. And you'll be sent a follow-up email that that will tell you, step by step how to create a workspace, how to download the indicators from the indicator store, how to apply the indicators to the charts, how to save it, all that sort of stuff. All right, that's important that you watch that. It also has the details of the trade setups that we use in the live trading room. Okay, so it's important that you do that too. You watch that video. All right, and that is it. So all you have to do to get that started, go to CFRN.net, click on this right over here, put your name in, put your email address in, and that will start the whole process. Now, let's get into the trades. We'll start out with crude oil. Today on crude, we were minus 3 ticks on crude. Looks like we didn't have too many trades here. We missed some. You can see we missed this first trade right here, right at the open. We missed that one. We missed the follow-up trade right up here. Both of those were winning trades. We missed this one, was a winning trade. We took this one, stopped me out just about to the tick. A couple more ticks, I guess, it went through my stop, and then it went down like we expected it to do. We missed the follow-up trade here, which would have probably been a couple of ticks profit for me. Changed directions, and we missed this one. Now you see I'm missing all these trades, and you're probably saying to yourself, why are you missing so many trades? So far there's been 1, 2, 3, 4, 5, 6 trades, and I took 1. Well, I'm trading about 8 different markets at once, and I'm answering questions from hundreds of people. So I end up missing things sometimes. When you become a partner with us, you should be focused on the markets, and you should be taking these trades. So you would have been up here, and you would have been up here, and that would have been your goal for the day. You would have been done. You wouldn't have had this losing trade because you would have been done. If you got this one and this one and this one, then you would have been up 15, 20 ticks per contract. You would have been done, and it's 20 minutes into the day. Anyway, this was my first trade that I took with crude oil, and I got stopped out on it. This was the next trade that I missed. This was the next trade that I missed. I took this trade over here finally on crude, and I got let's see, what did I get? I got 5 ticks profit on that because I ended minus 3 on crude. So I was minus 8 right here. I got 5 back right here. And that was it. That was all I did on crude. All right, I missed another trade right here. This would have been a break-even trade, following my rules for moving the stop to break-even. And that was it on the crude this morning. Okay, so let me slide crude off, and I'll bring the next chart. Will be the Russell. Here it is. Now, on the Russell, we had a few trades today, and we were plus 10 ticks on the Russell. Let me scroll all the way back. We missed some nice trades on the Russell. Some darn nice trades. This was our first trade of the day right here, I think. We took a break even on it. And that trade worked out pretty well. There was a follow-up trade down here that we missed, which also worked out really well. And another one here, and another one here. All those worked out really, really well. I was pointing this one out to everybody, and this is another thing that goes with what I do in the live trading room. I point the trades out to people, and when I'm pointing it out, a lot of times I'll miss the opportunity to enter it. I know some of the people in the live trading room got into this. Some of the partners got into these trades. I unfortunately did not. I did fill on this one over here, and I got long, took some profit. I think I took 10 ticks profit on that, and I think I had a break even on this one over here. All right, I missed that, and I had a break even on this trade. And those were the trades that I actually took on the Russell. This would have been a break even trade. This would have been a break even trade. This would have been profitable, and this was a break even. And that was the end of my trading on the Russell this morning. I don't know, it looks like topping action right here to me, but we have to kind of wait and see what's going to happen. But it looks like topping action. I would look for a close above that box before I consider going long anymore. All right. Let's see, sliding that back, and now we'll do gold. All right. In gold. Let's see. My first trade in gold was right here. This is the one that we finished getting our our goal on. I only got 5 ticks out of this trade, and it went like 25. I was watching something on the Russell at the time, and I ended up missing almost everything on this trade. We took a long trade right here on a close above the trend line, and you can see it went sideways for a little bit, but then finally it just jumped up, and it moved really fast. Apparently, this move up to here was really fast, and the move back down was also pretty fast. And I got caught on it right here on the way back down. The next trade that we took on gold was right here. We took a little bit of profit on that, followed it up with another one right there, a little bit of profit, and break-even trade over here. That took forever. Break-even trade here, break-even trade here, break-even trade here. Now, all these break-even trades, they had either closed above the MA1 or had given 4 ticks profit in the trade. Most of them had given 4 ticks profit in the trade. So that was it. We ended plus 16 ticks on gold. Okay, plus 16 ticks on gold. We took quite a few trades, but in the end, we're plus 16 ticks. Now the soybeans. Let's see. On the soybeans, we had our very first trade right here on the soybeans was a loss. That was minus 8 ticks. And yeah, that was minus 8 ticks. And the next trade was a break even. The next trade was a 4-tick win, and the trade after that was another 4-tick win. You can see that the trade after that really moved. I didn't take this trade because I figured 1308 was going to be a sticky area, and it was kind of sticky. It moved up during the break. It moved up, and it was just sideways here. This close above 1314 should have gotten to 1316, but it didn't. Unfortunately, it didn't. But I didn't call anything about that. All right, and that was it for the soybeans. Now on the ES, I'll point out some stuff on the ES. We had established this range here. One of our partners had asked me to draw boxes to establish the range, and we had established the range, and he was trading back and forth between these boxes, which was nice for him. It was good that it went back and forth between the boxes. There was only one trade here that I had identified. It was this one right here, a long trade, and that would have given 4 ticks, come back and taken me out at break even had I gotten into the trade. I don't have any SDOM open, so I can't really do anything with it. You can see the ES is headed right up here to 53. There's a weekly trading zone there. That's where it looks like it's headed up to. All right. I was hoping yesterday or last night that it was going to go down all the way down to 29.30, but it didn't make it down there, because if it had gone down there, we would have issued an option buy. Been looking at some call options to buy. All right. Now this one is natural gas. We didn't trade a ton of natural gas today. Just a little bit of it. This was our first trade of the day right here. I think, what did I take on that? That first trade on natural gas? I think I took 6 ticks profit on this. My entry was 1 off the close of the bar is at 198. It dropped down to 190, given 8 ticks profit. I took 6 ticks when it pulled back up to the MA1. I missed a bunch in the natural gas today. There was one here, 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 here. I missed all those. I took a break-even trade right over here, and I think that was all I did on natural gas. All right, there was a long right here, break-even short right there, and that was it. That was all she wrote. During the break, there was some pretty good opportunity. You can see the markets moved around pretty well. There was a short from right in here, and a long from right over here. Okay, that was all during the break. Just recently, there was another short right here on the natural gas. Okay, now the thing to keep in mind here, guys, is that we're doing the same exact thing over and over and over and over and over and over and over again. We're doing it on the same time frame, using the same risk, the same trade setup, the same indicator set, the same everything on every market that we look at. Okay, so if you haven't become a partner with us yet, if you haven't taken our free trial, then, well, you should. Go to CFRN.net in the upper right-hand corner of the page. Right here in the upper right-hand corner of the page. Just give us your name and your email address. Click on register for a free trial, and you will get all the information you need to become in the free trial. Once you're in the free trial, you get all the information you need to become a partner. All right. That's it. There. I did my recap quickly. Just a reminder to all the partners meeting is tomorrow night. It's not Thursday night. It's Wednesday night this week. We're going to do it Wednesday night. To all the folks on the free trial, if you want to become a partner, you have to do it before the meeting to get into the meeting. It is partners only. All right, with that, I'm going to wrap it up, and I'll pass it back to Dwayne. There.
All righty. Well done. Thank you, sir.
Not a problem.
And so it's early on in the month. Where do we stand again? What's the tally? I know you brought out the spreadsheet.
$655 a contract, I think.
Okay.
Here it is. I've used 7 out of 20 trades.
Yeah. Well, actually, yeah, because we're only 2 days into the month. And our goal, guys, is to our $100 per contract daily goal. We allow ourselves the luxury of 10 trades to hit that goal. Now, you may be thinking, whoa, I'm no rocket scientist or math genius, but that doesn't add up. Oh, I assure you, it does. It adds up. It adds up quickly. A very smart man once said that compounding is the 8th wonder of the world. True story. And so, if you want more information, because as soon as you hear 10 trades, you go, what? 10 trades? Well, you're just giving it all away in commissions. Well, no, you're not giving it all away in commissions. What you're doing is you are paying commissions. But hopefully it doesn't take you 10 every day. Took you how many yesterday? What was the deal?
Yesterday it took 4.
Took 4. Today it took how many?
3.
Took 3, so 7. So out of 20, because you get 10 a day, he's used 7, but tomorrow we'll give him 10 more. So he'll come in tomorrow with 33?
Well, I have 13 left, so I'll have 23 tomorrow.
23, that's right. Okay. See?
23.
Tell you I wasn't no math genius. 23. Now, you go, well, okay, but that's not much money. No, it's not in the beginning, right? So what you do, the way our program works, is it's no get rich quick by any stretch of the imagination. We're teaching you how to trade. Most traders do start out with a relatively small account. And so what's important is that as your account size builds, you also mature as a trader. The two of you kind of grow up together. Now, we don't have time in this radio program today to go into full detail, but if you want more information, as Michael said, take the free trial, send us an email, support@cfrn.net, call us, 949-42-E-MINI. And if you need help with your charts or your platform or your data feed, call Bert or Leslie, toll free, 866-928-3310. Now, if you're thinking, man, I didn't have time to jot any of that down, it's okay. Just it's on the website. Plus, when you sign up for the free trial, you're going to get an email that has all that information in it. So don't you worry. All right, we're going to pause right now for just a very brief station identification, and then we're going to come right back with Mr. David Williams from pagetrader.com. So don't go away. We'll be right back.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
We don't thankful, Lord, for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too.
Good morning, Dwayne.
David, good morning to you, sir. Welcome to the show.
Thank you very much. Pleasure to be here. And good morning, Michael. And good morning, everyone.
Good morning, David.
Good morning, Michael. Well, don't we have somebody very special coming on the radio today?
We have someone very, very special coming on the radio today. Her name is Miss Kathy Lien. She's going to be with us at the top of the hour.
Oh, fantastic.
And I've given everyone a copy of the link so they can go out, check out her profile and all that good stuff. She has accomplished so much. Now, in the bio, it doesn't give her age. However, it does have some dates, and so you don't have to be a math genius, which I just proved I'm not, to figure out that she has accomplished a lot at a pretty young age. So, I mean, David, you and I are men of a certain age, and so someone like Kathy, we would say she's just a teenager, practically. I mean,
Just a little girl, really.
I don't think you can say that. That's probably not politically correct.
Okay, well, I hope she takes it in the right way.
Yeah, you know, we've
She's very young
emailed back.
looking.
We've emailed back and forth. We haven't even had a chance to have a telephone conversation yet, but I get the impression just from the tone of her emails that as bright as she is and as much as she has accomplished at such a young age, I don't think she takes herself, you know, too seriously. You know what I mean? She seems to have sort of a lighthearted spirit about her, which is very. That's a great thing. So.
Oh, it is a great thing.
Well, tell us what's going on in your world today. We've still got about 20 minutes before she dials in. She's going to call in, and Bert or Leslie, either one, will patch her in live when she dials in. Anything particular going on in your neck of the woods you want to talk about?
Well, let's see. Gosh, I'm trying to think if there is something other than the markets. Oh, that's right. I don't have anything in my life outside of the markets. No. All I think I can talk about really today, because we've had such a big move in the S&P and there's so much going on in the markets, I think all of my attention is on the markets. I don't know if there's anything particularly newsworthy that I would leave that to you. But I don't know what it is because I don't have my attention on it.
You're going to come up short if you turn to me for news today. I don't have anything big. Microsoft has named their new CEO. That's big news. I'm not familiar with the gentleman, Satya Nadella. I'm sure most folks that travel in those circles know exactly who he is and why he qualifies for that position. Walmart is going to invest $500 million in Canada to create 7,500 jobs. That's always a good thing. Toyota expects record profits after the yen boost. Let's see. What financial result does Twitter need to hit on Wednesday? Okay, Twitter reports after the close tomorrow. Its stock has been on a tear since its IPO on November 7th at $26 a share and closed the first day at $45. It has subsequently hit a high of $74 and is now trading around $65. At a price of $65, Twitter's market cap is approximately $45 billion. That's B as in boy, billion, when you include the options and restricted stock units that have been awarded but not vested, along with 14.8 million shares for the Mopub acquisition. I'm not really familiar with Mopub. Now, if I'm not, it was either yesterday or today, Facebook turned 10. Did you hear about that?
I did. I did hear about that.
Since Mark Zuckerberg first said the words or created the thing called the Facebook. It's been 10 years. Did you, David, watch the movie that was out? It's called,
No,
I think it's called The Social Network or something.
I did not.
Gosh, you know, I kept waiting for it to come to Netflix, and it just never did, and so I went to the Red Box. Do they have Red Boxes in Las Vegas?
They do, and quite often I see people doing some kind of transaction at them. I'm not even sure what they're doing. I guess they're getting movies.
Yeah. Yeah, you rent a movie. It's a clever idea. I've often wondered how long it could survive in the face of the low-cost ability to stream movies into your home these days. But the boxes are still there. And in fact, when I went to return the Social Network that I rented, and I fell asleep, you know, I was so excited to see this movie. And I don't know if I was just tired or if it was the slow pace at which the movie moved. I mean, this is stuff I'm really interested in. These guys sitting up, you know, hacking all night, trying to, and they weren't sick when I say hacking all night. They were working at their keyboards. It was very fascinating. For some reason, I fell asleep twice, and then I was going to have to pay for like a third day of this. So I took it back. And when I took the movie back, there was a line like 7 deep of people waiting to, actually this Circle K in my neighborhood has 2 Red Boxes out front. And there was a line at both of them. I ended up going across the street to a Walgreens and had to go inside of the Walgreens. There's a Red Box that I guess not as many people know about, because it's not out, you know, visible to the public driving by, and I was able to return my movie. And that's kind of a neat idea that you can rent from one box and return to another box. So, yeah.
No, I'm not surprised. Just in speaking of business, you sound surprised that the Red Box works. I don't find that surprising. I really don't at all.
Well, I'm just saying because
just the ability to say that, well, you can get streaming in your home cheaper, that does not, to me, at all decimate the business model for Redbox. Redbox has a very distinct business model that they're following, which has to do greatly with convenience and with the fact that many people, although it may be inexpensive to get that in their home, many people may not want or know that they can do that, number one, but on the other hand, they may not want to have that monthly recurring bill, which isn't so inexpensive for their home. As an example, having internet in your home here in Las Vegas is $70 a month.
Yeah.
Just to have or $50 a month. So there's a lot of people who don't want to commit to $50 a month, and where I think you might be, passing over is that yes, it's very inexpensive to have the Netflix, but it's $50 a month to have the net at all in your home. And these people may not want this is marketing to the convenience of people that go to 7-Eleven and the fact that they don't have to have a $50 a month connection in their home. They can rent a movie, and they are paying a premium to get that movie, and it's very inexpensive even though they're paying a premium to have the box there and the whole thing. So I'm not surprised that that business model works at all, and I'm delighted on a certain level that something as almost non-technical, it does seem on a certain level like, wow, really? You're going to go to a box and it's a vending machine for movies, and you're going to take a movie out, but it saves people $50 a month in terms of not having to have that reoccurring bill. That's where I think the market is.
And goodness gracious, you can go to Walmart and you can buy a DVD player for $29. I mean, that's a one-time. There's no recurring charges there. I don't know if you can get a Blu-ray quite that cheap, but I know you can get a DVD player for $29, and I think you can even get a Blu-ray for probably $59 at this point in time.
Yeah.
And the quality of the Blu-ray movies it's pretty extraordinary. Remember the old Betamax? When VHS, when we first had the ability to watch movies in our home, there was a choice between VHS and Betamax, two competing technologies. And in the beginning, no one knew who would win that war. We all know that VHS they won. But I remember I never owned a Betamax machine, but my brother-in-law did. And that thing was a monster. It was huge. If you go onto Walmart today and pick up one of these little boxes that has like the Blu-ray play, you shake it, you go, I'm sorry, I think this box is empty, and they're like, oh no, it's all there. Amazing how the technology has shrunk.
Yeah, for $29, I mean, the shipping cost is half of that just to get it to the store. So,
yeah, no, you're absolutely right. So, okay, Twitter is reporting earnings tomorrow, so we'll see what that's all about. Facebook turns 10, and Zynga shares take off on UBS upgrade to buy. Oh, let's take a little peek at that, because I've said all along that I thought the Zynga, to me, unless there was some kind of fundamental thing that I did not understand about the company, that it looked like a good deal. So let me get that up. You remember the symbol? See there.
ZNGA, I think.
Mm-hmm. That's it, right there. Okay, guys. Now this is a daily chart. Wow, look at that gap. Okay, today's Tuesday, so from Friday's close, or no, this would be Monday's close, so we had a gap. This would be on the UBS upgrade to buy. We've got our 50-period moving average blue, our 200-period moving average red, and on the daily chart, prices bounced off the 50. Kind of tried to bounce off the 50, failed, found support at the 200, and this gap here, I'm going to perhaps guess that was due to earnings. I haven't read the full article, but it's gone. Since last week, it's rallied from $3 and I'll call it 50 cents up to $4.72. That's a substantial move. What is that? What are we talking? 25, 30%, Dave?
Something like that. Yeah.
Yeah, it's pretty nice. So, well, good for Zynga. Now, they have their hand in, well, they were the makers of the very popular game Farmville, which was, for the longest time, my wife, honestly, she had a couple of farms on Facebook, and she spent quite a bit of time, and I'll never forget, one day she called me from work, and she said, please don't get mad, but I need you to do me a favor. And I said, well, honey, you know, I'll do whatever I can. I need you to log on to my Facebook account and harvest my crops. I said, what? And she goes, yeah, if you know, I've got like 15 minutes. They're going to wither in the field if I don't get them harvested. And I said, this is a joke, right? I mean, am I on, you know, candid camera? And she says, no, no, will you please just do it? And I said, okay, walk me through it. And she walked me through it. And she was so fascinated by that thing for a period of time. And then all of a sudden, one day, I realized I hadn't seen her at her laptop playing the game. I guess it's considered a game, for a few days. And I says, hey, what happened? She goes, yeah, I just lost interest. I go, but you were so passionate about it. She goes, yeah, I know. And then I wasn't. So, and they're trying to get into the online gambling. They have, well, now this is old news. They rolled out a test pilot in the UK where you could gamble online with real money. I expected that to really kind of jumpstart the stock, and it didn't. Brazil might avoid a downgrade if it increases taxes. Okay. Top U.S. law firm steps into the Barclays LIBOR test case. Okay. And, well, McDonald's is running out of ketchup in Argentina. And Bank of America to hire more than 200 small business bankers. When you're talking about a financial institution the size of Bank of America, that hardly seems to be big news, but apparently it is, because here it is in the news. And the Reserve Bank of Australia holds their interest rates steady. Is there anything else? Oh, in the U.S. economic news today, factory orders were down 1.5% in December.
Huh.
So that's it for me on any business news. Technology news, I've already shared that. Microsoft getting a new CEO. Anything else there? Asus new Chromebox takes another shot at the desktop for $179. Now, I'm not familiar with this. Samsung's Chromebox hasn't exactly taken the world by storm, either because it's overpriced, underpowered, or simply not the form factor people want for Chrome OS. More likely, it's a combination of all those factors, and not coincidentally, Asus is trying to tack at least 2 issues in its own Chromebox to be released in March. The Chromebox will be priced at just $179 and will come with a gift from Google. Compared to Samsung's Series 3 Chromebox priced at $329, this box is much cheaper, though it won't have radically better specs. It's a small square box that will run on either a Celeron 2955U or a Core i3 processor, which is a pretty good processor. I mean, you can go with the 3, the 5, or the 7. The computer we offer has the i5, but an i3 is really probably sufficient for most people, unless you're doing some high-end type graphics work. Connectivity includes a media card reader, 4 USB ports, HDMI, and a display port. So with those capabilities, the box should be able to run Chrome OS without any major issues. David, I know you've gone to solid-state drives. Have you toyed at all with the Chrome operating system?
No, I have not.
Okay.
I have not.
And now your guy Johnny, he's a real whiz with all the technical stuff. Has he talked to you at all about it?
You're not talking about the Chrome browser. You're talking about the operating system.
Yeah. Now, I do use the Chrome browser. In fact, this is a Chrome browser that I have up right now. I do use that. Firefox was my favorite, and then some few upgrades ago, I fell out of favor. I did with the Firefox.
What was the issue with Firefox?
You know, it seemed like some of the things didn't want to load properly. And when I was doing work on my blogs, the formatting didn't seem to work properly. And so I was kind of forced to use Chrome a few days back to back because I had some work that I had to get out, and Firefox just wouldn't do it. So I just never went back.
Yeah.
I got accustomed. Do you use Chrome for your browser?
I'm using Firefox. I do have some issues with Firefox as well that happen, but I think I may have issues of some kind or another with any browser. And if Chrome is working for you, that's fantastic. You know, if it's rendering things properly and so on.
Yeah, for me, indeed it is. I would like to poll the audience here. What browsers are you guys using? I'm sure there's some of you still using Explorer, Internet Explorer. And I understand that the most recent release of Internet Explorer actually works pretty doggone good, I've heard, and that it has fewer security flaws. I can't speak from experience because I have not used it. But let me just look at the chat box and see if there are any other questions. Oh, there was an interesting comment from Jim at the very beginning of the show. I had this page, and Jim says, Dwayne, is that you? You look mad. No happiness in that face at all. You know, guys, that's about the best smile this man of a certain age has. That's it. that's me being happy. But Jim, thanks for your concern. I assured him I do have joy in my. You know, that one right there, I do look a little
Richard Nixon-ish right there.
Oh, seriously? Richard Nixon? Okay.
Yeah, you got a little Richard Nixon going on there.
That's funny. And is that me? Yeah, that would be me as well. When I first posted that picture, somebody sent me a message. They said, did you just open a restaurant? I was like, okay, don't look like a waiter. And I've just finished, speaking of tuxedos, I just finished watching Season 3 of Downton Abbey. No, it's not Downtown Abbey. It's Downton Abbey. And I've got to tell you, that is really a well-done program. Have you, by chance, watched it, David?
No, I haven't. I have not even heard of it, I'm sorry to say.
It's a PBS masterpiece theater series, wildly popular around the world, it seems. And it harkens back to the 20s in England, when there were still noblemen and titles, and they still have noblemen and titles and all of that. But this is when the master of the estate had a huge staff. Let me pull up a picture. It's a very beautiful place. It was shot on location. And guys, of course, you have to start. You absolutely have to start with Season 1, Episode 1. I just want to get a nice picture. Can I do it? Let's see.
While you're trying to get that picture, Dwayne, I just wanted to make note that back in 2004, the Internet Explorer browser had about 85% of the users. As of today, Internet Explorer has about 10% of the users. Chrome, the one that you're using, is the highest used browser, according to some statistics that I'm looking at here, followed by Firefox, which is about half of what Chrome's 2013 statistics were. So Chrome apparently is taking the lead and is taking over from where Internet Explorer used to be.
Number one, that's a big deal, because Microsoft kind of ruled the browsing world for so long.
Up till 2004, and then they started in their big decline. Other browsers came out, and so on.
Now, if you can see some of these pictures, I think they're on some kind of a scroll. But you can see the costumes, and it really, the character development, and it really gets into the lives of the staff, the people who live, you know, down below, and how everyone dresses for dinner, very fancy. I mean, everything is, it was the end of an era. And I just have to say the show was just, I really enjoyed it. So this isn't the greatest picture of the estate, but of course you can go on the internet, guys, just Google, and that's how you spell it. Downton, D-O-W-N-T-O-N, Abbey, and you can rent it, you can buy it from Apple iTunes. We watched it, the Season 3 we watched over the weekend, the entire season, using Amazon Prime, which gives you access to, I think it's somewhere between 35 and 40,000 movies and television programs. And that comes along with the free shipping on all your orders and all that type of stuff. So if you haven't seen it, I highly recommend it. It's family friendly. You know, your kids can watch it with you, and just good stuff. So Kathy will be here any moment. In fact, Bert, she might already be with us, and just give us a heads up when she arrives. The market, David, this turnaround here on the S&P, we'll keep this chart up and we'll talk about it as Kathy's getting dialed in and being patched through. Were you looking for a turn here? Does this look like a turn to you? What are your thoughts?
Well, we do certainly have a significant bounce today, a decent bounce off of yesterday's decline, and we have a few things that we are working on with the S&P, but yesterday's big decline is obviously indicative of this bigger impact that the markets have all felt, I believe, since the beginning of 2014. Because I've mentioned a number of times that there has been a different tone, a different something about the markets since the beginning of this year, and it started right in the holidays, and we still see it till now. So that obviously makes the our forecast for December 30th top on the weekly chart. That makes that top substantially more important. Yesterday's decline all by itself makes it substantially more important, and continues to confirm that there's some unusual stuff going on in the markets since the beginning of this year, and that doesn't mean that you can't trade it. We're trading it now, but you just have to take your very best work and apply it to the markets. Some people may not feel, as we do, that there's been some energy shift, something, I don't know what exactly to call it, but the tone of the market has been different. Not just the S&P, but a number of markets have been different since the beginning of 2014. And we've said this so many times on the program, we've all talked about it, that the markets are really as big as life. They change. They don't just go up and down, although that's all they do. That's really not all they're doing. The how, the where, the when of those ups and downs, the speed, the tone, the directionality, all of these other components obviously play into all this, and they're trying to express in a very simple movement of up and down and sideways, if you want to call it a movement, they're trying to express all of life in those three movements. And so the markets certainly are, for me, are as big as life. They change, and that's why I'm not a real fan of totally, absolutely mechanical systems, because the markets are not really mechanical. They are as big as life. And it doesn't mean that you can't have a specific setup and so on that you're looking for, but they're as big as life, and they do change over time. And that's why you have to be, it's not just a crank that you turn money to make. You have to reason about what the market has done, where it is in its story, and put your trade together. But I see a difference in this year. We've just completed January. It's been an interesting month, and a number of important things have happened. We're now into February. I think the whole year is going to be quite volatile because of the nature of what we've seen so far in a number of markets. So, and I don't want to talk too long because I know your guest is coming here. So,
our guest, and I've just been given the word that Kathy is in the house. Kathy, welcome to the show.
Thank you so much. It's a pleasure to be on.
Well, we're excited to have you with us. My co-host, David Williams from PageTrader.com, he's on with us.
Hi, Kathy.
And our broker, Bert, might pop in. But, yeah, David, go ahead. Introduce yourself, please.
hey, Kathy, my name's David. I have a cold, and I graduated high school. And those are the basics. I just want to lay them out right up front. That's basically what you're dealing with. All right.
All good stuff, I hear. Well, it's a pleasure to be speaking with you as well.
Thank you very much. It really is nice to have you on the program, and I know we probably both have a lot of questions for you. We don't want to put you on a really high pedestal, but it's hard not to. So just accept the fact that you're coming in on a really high pedestal. And we're
well,
not here to
given that
knock
I'm not
you down.
that tall, I totally
helps.
appreciate it.
That and a good pair of Jimmy Choo shoes, and you're good to go.
Yeah,
All
I
right.
can probably clock in a 5'4", I think.
Do you really? Oh, that's great. That's a great height for a woman, by the way. 5'4" is a
Well,
wonderful
that
height.
includes
Don't let
the
anybody tell
shoes.
you.
Well,
Oh,
that includes
okay.
you.
Well,
My wife is 4'11", so she
wow.
sometimes she can't get on all the rides when we go to the fair. So
Wow, I guess you know what it's like.
yeah.
So Kathy,
So-
you are a. I'll back out in a second. I just want to ask you something. So, you're a mind. You're a trading mind. You've got this in your blood. If you have a boyfriend, he better know about markets. He better like markets, because you're all in this. You're all in.
I am, and I do consider myself, a trader first and an analyst second. A lot of people may read my analysis of what's going on in the markets online, or they may watch my commentary on CNBC. But at the end of the day, I'm a trader first and an analyst second. And all that really matters is how these views translate into actual trading opportunities. But on a side note, my husband is not in finance at all, and
Okay.
believe it or not, he could care less about the market, so he leaves that all to me.
And are you able to deal with that? Because sometimes a person that's as intensely into this and as focused as you obviously are, you do want an outlet. You do want to be able to say, oh, wow, it was so interesting, the difference between the euro and the Dow today. They normally do this and that. Where do you get that? You don't have that, and maybe that's a release. Maybe that alone is nice. You don't have to talk with him. But a lot of people...
It's exactly that. I mean, it's a nice breath of fresh air, and I think an important balance to have in any type of relationship or marriage. Because I live and breathe the markets, I would say 12 hours a day, if not more.
Yeah.
And it's nice to come home and have someone talk about something else.
No, I agree, and I personally, although I do very similar in the same way that I'm intensely involved with markets. I love them. I find that I enjoy leaving the office and leaving it all behind to the extent to which that I don't even have a computer at my home. I really want to come home to a very different environment than the intensity that I feel and love at the office. So I totally can understand your liking the idea that you don't have to have a partner that's deeply involved in the same thing.
Right.
That's a great question, Kathy. Do you leave work at work?
I try to, but I'm not always able to because the foreign exchange market actually moves 24 hours a day. So last night I was managing my trades, between 10:30 and 11:30 p.m. East Coast time because the Reserve Bank of Australia had a monetary policy announcement at 10:30, and the markets were, very active after that. So while I would like to leave it at work, I've got trades on that are not sensitive to the time of day that I should be sleeping, and so as a result, I'm up all hours a day. Fortunately and unfortunately.
Oh. Well, you look very young, and you don't look like you're lacking sleep. So that's good, because some traders will get so deeply involved in waking up at 2:30 in the morning to check their positions and then trying to get back to sleep. And you end up having a bunch of people that look somewhat like zombies, and the zombie apocalypse could happen. Those traders could just wake up someday and just realize they have to go out and kill others that are not traders. I don't know, but... I'm basically saying that you look pretty good for somebody who is probably, you probably had more than your fair share of managing positions at 2 in the morning to check on things. Do you do that?
I think that's called good lighting in the media as well as in headshots. So,
oh, that's funny.
I actually, I actually do have a business partner who I trade with, and his name is Boris Schlossberg. I usually manage our trades from about 8 a.m. East Coast time to midnight New York time, and he then takes over from midnight all the way to 8 a.m. And then we do overlap during the North American hours. So it sounds like I work a lot more than he does, but we do overlap during North America. But during the evening hours, I'm the one on the desk, and I'm responsible for making sure nothing goes wrong before midnight.
Can I? Oh, go ahead, Dwayne, please. I'm sorry.
Well, I just want to say, in your bio, it says that you graduated NYU's business school. Let me quote that properly here. New York University Stern School of Business. You graduated at 18. That's no small feat. My claim to fame is I graduated high school at 16. But I think you've one-upped me there. When did you first realize that you had an interest in trading and you thought perhaps that might become a career move for you? Because we both know that this is predominantly, and I know it's changing, but predominantly this is a quote-unquote man's business, correct?
It is, generally speaking, statistically more of a male-dominated business than a female-dominated business. But as Janet Yellen's breaking down those barriers, I think that it's showing that even at the very top of the totem pole, you can have a female Federal Reserve Chairman, so you can have female traders as well. Mm-hmm. In terms of your first question about what my appetite in the markets, when I started off at NYU, and I was in the Stern School of Business. This was during the go-go days of the late 90s when we still had the kind of mania around day trading tech stocks, just the day trading mania. And at that time, I started, I joined a bunch of other students who started a group called Investment Analysis Group. And my major was in finance, and basically we had various professors teach us how to invest and analyze stocks. So that kind of initially whetted my appetite in the market. Now, granted, that was exclusively equities, and my expertise right now is currencies. But it gave me a really good foundation of understanding how the markets work, as well as how people think about investments. Then I had an internship while I was in college, and I actually interned with a gentleman named Dodge Dorlin, who was head of the Market Technicians Association. And for those of the listeners who are not familiar with that, that's the kind of the preeminent technical analysis association, in the U.S. So he was the president of the Market Technicians Association, and he invited me to attend their annual symposium. And, I met the big names like Ralph Acampora, John Bollinger, Steve Nissen, and I actually started off in the markets primarily learning technical analysis. And this was, Dodge had a kind of old approach to analysis at the time, and we're still doing everything on pen and paper, and we're doing point and figures, so we don't have the luxury of all these wonderful trading screens and charts that we do this day. But that's where I learned technical analysis and trading, because he managed a little hedge fund, and we would basically contribute to the research and the analysis of some of the stocks that his firm was interested in. So that was when I was in college, and then when I graduated college, I joined JPMorgan's sales and trading program. And at the time, usually when you graduate from a business school with a financial degree, your track is, you have one of two tracks. One is investment banking, or the other one is the sales and trading departments of these large bulge bracket firms. And I knew that I wasn't smooth enough to be a salesperson, because I couldn't sell anything.
You sound pretty good to me.
Yeah.
You sound pretty good to me. I'll buy it.
I'm buying. Yeah.
I'm buying all this stuff right now. Go ahead.
Well, this is just my history. I'm not trying to sell you anything. If I tried to sell you anything, I don't think you would even buy a $10 bill that
I think you're
to give you on the
discounting
table.
yourself a little too much. You're very enthusiastic, and you could sell, but I'm not going to try to sell you on that. Little humor there. Go ahead, please.
And then I knew I didn't want to do investment banking because I didn't want to work 20-hour days and weekends on top of it, even though I do now. But,
do that, yeah.
But at the time, I thought that these are things I did not want to do. And, of course, I was really enthused in the markets. I had a lot of experience from internships as well as from my education. So I decided to join JPMorgan's trading department. And one of the great things about joining these banks is that they usually put you in a rotational program. So you get to rotate through various different groups, see if they like you, and see if you like them. And the first group I rotated in, and thank goodness I didn't stay with them, was credit derivatives. And we all know that, that was kind of the ground zero of the financial crisis.
Right.
So I didn't, so I rotated out of that group. My second group was the FX trading desk. And I just fell in love. Everything made perfect sense to me. I love the way the markets were moving, and the team really, enjoyed my contribution. And, I remain in the FX space to this day. And I think this year is my, that would actually be, in September, my 15th year of trading currencies.
Okay, so you're over 25 then. I mean, I'm just guessing at this point, because the picture seems awfully young. I wasn't sure.
Sadly, far above 25.
Oh, not much, because I kind of did the math, and I'm not a math whiz, but you're considered to David and compared to David and I, who are men of a certain age, you are certainly young, and you've accomplished so much. As I look at your bio here, traded FX spot, options, interest rate derivatives, bonds, equities, and futures. Now, our audience, primarily, we have a futures audience, everything from, of course, the S&P 500, E-minis, Russell, NASDAQ, but the other futures such as gold, copper, natural gas, we trade those as well. What was your experience with futures, and what was it that attracted you to the currency markets more so than futures?
Well, when I traded futures, I did trade the E-minis. I traded interest rate derivatives. I traded FX futures and commodity futures. But I traded it from the perspective predominantly of its correlation with the foreign exchange market. Because once again, the FX is where I came from. And even when I moved from market-making currencies to prop trading for JPMorgan, it was still a desk that was affiliated with the foreign exchange desk. We were just able to take positions in other asset classes that either correlated or hedges against some of our foreign exchange positions. But overall, though, my primary experience and the trades I was most interested in were interest rate steepening and flattening trades, because during that time we had a lot of movement on, or expected movements on, interest rates. But I think that at the end of the day, though, what I really love about currencies is the global nature of it. I mean, you're essentially following what's happening in all parts of the world and being able to translate those views into actual trading opportunities. And for those of your listeners who don't have any familiarity with trading Forex, a lot of the instruments that you may trade now, like commodities as well as equities, have a very strong correlation with currencies. I mean, there's a very good reason why today we've got a very, very nice rally, or not rally, but recovery and rebound in stocks. And that positive sentiment is being echoed by a rally in the Australian dollar, a rally in the dollar yen. And that's something that we see very, very often, and something that can be translated into trading opportunities if you know how to.
So, Kathy, I have a few questions for you. If I go to work for JPMorgan, am I going to be net long or net short anything, or am I going to be hedged in every single case?
Well, I think the rules have changed since I work for the bank, because obviously, we have some regulation changes, so the banks are no longer allowed to take prop positions the same way they were before. So now they're supposed to be, one-to-one hedges. But if we were talking about back then, yes, we were able to take on risk, and we were able to take directional views on different asset classes.
And what are they doing now? How if I go to work for them now, am I essentially hedged in every position?
That's the way they're supposed to operate going forward. Is they're supposed to only have one-to-one hedges. There was some kind of ambiguity in the rules before, and they kind of found some loopholes. But I think with the new regulations, they've changed that. But what ended up happening as a result of that is a lot of the banks have then spinned off various prop trading desk to independent operations.
Okay. Gotcha. Okay.
Now, your trading style, is it, I'm sorry, David, go ahead.
Oh, no, please, go ahead, Dwayne. You go right ahead.
I just want to ask, if your trading style, are you a technical trader, fundamental, combination of the two?
I always say that it's important to use a fusion of fundamental and technical analysis. I mean, if you were simply using one and not the other, in my opinion, it's kind of akin to driving down a road with, blinders on. You can't see what's on your left or your right-hand side. I think, when it comes to trading anything for that matter, it's important to understand, fundamentals at bare minimum, what the big stories in the markets are, as well as what news is being released. Because if you trade purely charts, and you're not aware that Friday's you've got non-farm payrolls scheduled for release, and everything looks like they're trading in tight ranges, you're just buying low, selling high, trying to capture the opportunity in the range, and then suddenly you get an explosion because you didn't realize that non-farm payrolls was on Friday. That would be a huge mistake. So at bare minimum, you need to be aware of the event risk and news on the calendar. And then the same goes
go ahead.
Technicals.
Go ahead.
The same goes for technicals. You've got to know where the key levels are. I mean, for example, $100 oil is obviously going to be a very important level. So it's important to be aware of what levels could represent points of breakouts or failure, so that you price your trade properly as well. So I always use a fusion of fundamentals and technicals and sentiment for that matter.
Okay, so in your statement here about these fundamentals and about the technicals, you're not necessarily saying that you're deriving a directional bias from the fundamental news that such and such event will absolutely make the market go up or down, but the fact that such and such a known event in the future, like a report, is going to come out, we want to make sure that we are either in or standing aside because those small ranges may break out. Or do you sometimes use the news for, and I'm sure you probably do, at some point you make a decision that a certain kind of news that's going to be released is going to be net bullish or net bearish for the market? Do you take a directional bias on news?
Scenario. It can be either scenario. I'll give you an example of the trade I took last night on the Reserve Bank of Australia. So the Reserve Bank of Australia had a monetary policy announcement, just kind of like the Federal Reserve's announcement. They were not expected to change interest rates, but people thought they were going to get more worried about the outlook of their economy because, Australian data's been terrible, China's been slowing, and, things aren't going so well there. But I believed that because inflation was so high in the country, they weren't going to be as negative as everyone expected. And also because according to the CFTC IMM data, speculators are holding massive amounts of short Australian dollar positions that the risk would be for an upside surprise and a short squeeze. So what I was looking to do was to buy the Australian dollar. But I didn't want to go out and buy it outright. I wanted to pick a key level. So as I chose to buy the Australian dollar against the British pound, basically buy the Australian dollar, British pound, so it's quoted as a pound Australian dollar pair. And so I was looking to buy the Australian dollar and British pound beyond a level 185, because 185 was a relatively significant, round number is what we call it, because the currency will trade, 184.30, 184.20, sure, 183, but 185 is one of those nickel numbers that's really important. So I decided to basically, buy when we have a break of that level. So when that happens, you have one of two things. One, you have a technical break, because this is a psychologically significant nickel number. But also, that would only be kicked off if my thesis was right, and the RBA ended up, doing something a little bit more positive for the Australian dollar. So I would let the news kick me or trigger my trades, but I would also pick my entries and exits based upon technical levels.
Kathy, could you tell me again? Was it a currency pair that you were trading? It was the Australian dollar versus the
British pound.
Yes.
And so would that be AUD/BP?
Well, the way it's quoted is actually GBP/AUD.
Okay.
So it's actually inverted. It's a little confusing, but
GBP/AUD. I've got it right here. And, by the way, we had you call in by phone because it's just the easiest way to connect you to the show, but many in our audience are actually logged in they're not only listening to us talk, but they're able to see our charts. And I've just brought up it's in a GoToWebinar type format. They are able to see right now a chart of the GBP/AUD, and I've got up a daily chart. Is there a different time frame that might better show the audience the trade that you had on last night?
No, this is the chart that you want to look at. So now we have the chart inverted, right? So I wasn't sure if your audience understood what I was saying earlier. I was trying to explain it in Australian dollar terms. But there's certain quoting conventions of currencies. And in this case, the British pound is always quoted before the Australian dollar. So therefore, if you're looking at this chart right now, you'll see that we have a very sharp decline in the GBP-AUD pair.
Today,
so what
yes.
that means, what that means is that the British pound declined and the Australian dollar rallied. So this is an example. So when I was talking about that 185 level, first of all, you'll see how this 185 level is a significant level, not only because it's got a 5 in it, but also if you got some spike lows from January 22nd as well as February 3rd that are pretty much around that level. And also it fails at that price mid-December at 185. So when I was saying I was buying 185, it was to try to explain it in terms of Australian dollar. But since we're bullish Australian dollars, what it really in reality in terms of the pound-Aussie pair involves selling it below 185. So yesterday, before the RBA statement, I don't know if you want to go to like a shorter term chart, like the
sure,
the
yeah.
chart.
You think an hour, 5 minutes? What's best?
Let's go to a 15-minute chart.
15-minute, okay. And there we go. Okay, I've got a 15-minute chart up.
So if you got a 15-minute chart up, then what you will see is that at 10:30 p.m. New York time, which is when we had the Reserve Bank of Australia rate decision, that the currency pair was trading pretty much around, I would say, 86.50. So my order to sell the currency pair was actually much lower. It was to sell pound Aussie at 184.82. So 184.82 was what I believe was comfortably below 185 and would only be triggered if my fundamental thesis was right. So you can see that the trade was pretty much triggered at the trade was triggered at, what's this time over here? At 10:30, yeah.
10:30.
So actually, I apologize for that. The 10:30 we're trading 85.85, 85.50, and at 10:30 when the RBA made their announcement, that's when the trade triggered at 84.82, and then it fell all the way down to 82.75 or 82.60 by 2 a.m. So this gives you an example of how I was going into the trade probably about, I would say, 75 pips below the price before the data. So that would assume that the event risk would have to be significant enough, and my view, and it had to fulfill my view in order to take me into the trade. And then my trade was basically banking on continuation below the 185 level.
And how do you? Yeah, how do you manage your risk on a trade like this, which I can see this is a combination of fundamentals and technicals. Is it dependent on the time? It must be dependent on the time frame of the trade, perhaps, but go ahead and tell us how you manage risk on a trade.
Yeah, well, with these types of trades, basically what we're doing is we're putting a hard stop in, and that hard stop is usually about like a cent above the current levels. And then what we do is oftentimes we'll just trail our stop lower. We'll have what we call a first target, which is used to kind of lock in profits once they move into our favor. So usually we'll lock in profits when it moves by 1 times risk or half times risk, depending upon how confident we feel in the trade. And then we'll trail our stop using a monetary amount going forward.
Yeah. Okay. Let me ask you a question. If everyone has the same methodology, or a lot of people are using the same methodology, does that change the market?
If you're talking about the same methodology in general, like let's say everyone's using an Elliott wave analysis, then yes,
That's right.
it will probably make breakouts, less significant because so many people will probably end up, pre-positioning for those trades. And I found that, some of my high-frequency trading strategies, you do have a lot of people, preempting the move. But this is something different. What I do is a fusion of my fundamental views with technicals, and everyone has different views. So I think that's where it's a little bit unique.
Yeah, and I would think that even with technical analysis, people that are purely technical, that are, if you had a whole bunch of people using the same method, they're all going to have their own independent entry based on that same technical. Let's say it's Elliott wave. They're all going to have their same entry. Some of them are going to be trading for a few ticks. Some of them are going to be trading overnight. And in the end, it ends up being a market rather than just being a bunch of people trading the same thing. I was curious just what your outlook on that was, because many people do believe that systems like Elliott wave and so on that have come into favor and then go out of favor, that when many people trade that same methodology, that it may change the market. But my belief also has been, somewhat to counter that all of those traders are not trading the same time frame. They're not all trading the same amounts. I mean, there's just enormous diversity within trading the same methodology, so much so that it is its own, it's just like a regular market. You've got people getting in and out all the time, just like you do in a regular market. So,
yeah, that's a very good point.
Yeah, that's just something that I wanted to hear your very good point answer on as well, if I may say so.
Yeah, I mean, I do think that's a very good point. There are certain levels that are just obvious to traders at any time frame that I think rises beyond the style as well as the indicator that you use. But in general, you're absolutely right. People trade, plenty of different time frames, and what may be important on a 15-minute chart may not be so important on a daily chart. So there's plenty of trading opportunities, and I think that the longevity of technical analysis as a form of trading, as a trading technique, is a testament to how many people still believe in its effectiveness.
What's next for you? Where are you headed? I don't mean today. Well, I'm going to get my hair done at 4. No. What is next for you in your career, or in where you're trying to head with your trading? Anything that however you'd like to answer that.
Yeah, well, my new business is focused on managing funds. Now, we unfortunately don't manage funds for U.S. clients. We only manage funds for international clients. But for U.S. clients, we continue to provide our trading signals and, Forex trading education through our website, bkforex.com. But our growth opportunity is managing client funds.
I see.
A question, why international clients only? This is from the audience.
Well, it's just the regulatory environment in the U.S. is changing so quickly that we want to wait to see how things settle and grow our international business before we come back in here and build our U.S. business.
Okay. Another question from the audience. Last night, the trade that you put on, why did you choose to go with a currency pair as opposed to, say, for instance, trading the Aussie dollar futures contract?
Yeah, that's a first fabulous question. And also, another question that kind of is related to that should be, why didn't I trade the Aussie outright as opposed to, and why did I pick pound Aussie? Well, first of all, both trades would have worked, but the reason why I didn't like trading the Aussie dollar outright, and part of the reason why I didn't go in the futures, is because I kind of believe that Fed policy should be positive for the dollar, and I didn't think that, granted they both rallied. The Australian dollar rallied against both currencies, but I felt like on a fundamental basis, we had some pretty terrible data from the UK the day before. And, my longer-term view is that we could see, maybe a little bit of additional weakness in the British pound, whereas, the continuation of Fed tapering is positive for the U.S. dollar. So that's why I chose a little bit more of a exotic combination versus the Aussie itself. And that's really the challenge of trading the futures. You could express this view in the futures, and you would have, been profitable if you did the same technique overnight. But you're restricted to that currency's performance against the U.S. dollar, and you don't have the option of trading the opportunity against other currencies.
Another question from the audience. What's your view on the euro, short-term, long-term?
Yeah, that's a great question. I am actually bearish euros in the short term and the long term. In the short term, we've got the European Central Bank meeting on Thursday, and the ECB has a huge problem with low inflation, and we've seen just countless reports coming out of the region saying that prices remain very, very low. Also, they're more heavily affected by the emerging market turmoil because it's part of their, it's the closest in proximity to the Eurozone. And then on top of that, data has been very mixed. Last week, we had horrid consumer spending numbers from Germany as well as France. So I think that the ECB is going to be kind of negative on the outlook on their economy, and that will stand in stark contrast to the Fed, who seems very, very optimistic, overlooking all of the turmoil in the emerging markets, as well as that weak December non-farm payrolls report that we had. So, from both a short as well as a longer-term perspective, those two dynamics, I think, will drag the euro lower.
Okay. Now, I'm looking at our economic calendar, and we have an economic calendar that it's global. Of course, we always want our traders to be aware of things like Fed announcements, but as you mentioned earlier, if a trader is trading, he or she needs to be aware of what is happening on a global scale, because we are truly trading global markets these days. And I'm looking at tomorrow, and which report were you referring to that's coming out tomorrow that you think is very significant?
Well, tomorrow, I think the central focus will be on the U.S. I mean, we do have UK service sector activity, which is quite important, but tomorrow we have GDP.
I see services PMI. I'm not sure exactly what that is.
Yeah, well, tomorrow we have non-manufacturing ISM from the U.S., and I think most of your listeners will be familiar with what that is, which is kind of a measure of service sector activity in the U.S. PMI services for the U.K. is exactly the same thing. It's just for the U.K. It's done from by a different agency. ISM itself is a private sector company, and PMI is provided by another private sector company called Market Economics. So it's basically the same thing as non-manufacturing ISM, just for the U.K. So that's a very important release during the European hours. And then, but I think on Wednesday, the central focus will be on the U.S. non-manufacturing report, because, in my experience, the employment component of that report is a significant leading indicator for Friday's non-farm payrolls. But on Thursday, the focus will be abroad, because we've got the Bank of England as well as the European Central Bank, who are holding monetary policy announcements. So it changes day by day, which keeps things exciting.
It sure does.
Another question from the audience: how do you decide which currency pair to trade? Is your decision usually more around the economic reports themselves? Does that tell you what you're going to trade?
Yeah, that's exactly that. While some of my trades may be positional trades, they're usually based upon economic data that's coming out during the week, or the economic data that's coming out over the next 24 hours.
Okay. All right. Gosh, there are so many questions, and I realize we only have so much time. You've authored 3 books. One I know is sort of a classic, if you will, and it's called The Little Book of Currency Trading. Did I get that right?
Yeah, that's a nice little primer on currency trading, and a great way, if you're just kind of starting off and just want to learn a little bit about what moves the Forex market, it's a great, easy-to-read book to start with.
Okay. And tell us a little about the other two books.
Well, the book that I'm actually most proud of is Day Trading and Swing Trading in the Currency Market. It's a more of a high-level book. It's the type where, I bump into traders at trade shows. They'll come with, pages highlighted and, Post-it notes all over the place. But I think it shows the depth of the content in there. But it's something you grow into. It's, much more dense than the little book, which is really easy to read, really easy to understand. But that's the book that I'm most proud of. And besides that, I have kind of an interview book, kind of a online or e-version of the Market Wizards. It's called Millionaire Traders: How Everyday People Beat Wall Street at Its Own Game. And it's basically a book that has a series of interviews with people who are trading online, either trading Forex or also futures, and they're giving their kind of nouveau take on how they trade in this new kind of market environment.
I'm reading from your site, BK Asset Management, and you're referring now to the Millionaire Traders: How Everyday People Are Beating Wall Street at Its Own Game. It says these people are not hedge fund managers or employees of big money center banks, but regular people who started with as little as $1,000 and turned it into 6 to 7 figure fortunes. These people come from all walks of life, live all over the world, trade a variety of electronic markets. Some focus on equities, others on futures, others on foreign exchange. Kathy, do you think the average person of average intelligence, computer literate, do you think anyone can learn how to trade, or is it something you're born with?
I absolutely do not think that it's something you're born with. I think that it's definitely a learned skill, and I'm still learning to this day. But I think that it's something you first have a thirst for, and then through that thirst, you try to learn more about the markets and try to gain more experience in. And none of this. I wouldn't liken it to becoming a doctor, but I think it's kind of a very sharp example, which is that no one's born a doctor. You've got to learn how to trade, learn how to pick up the scalpel, things like that. It's not the same, obviously, because it's certainly not as noble of a job. But I think it gives an example of how all these skill sets are learned and not something you're born with.
What would you say? I'm sure you've worked with many, many traders over the years, along with being a trader yourself. You've worked with traders. What's the biggest hitch in the giddy-up, if you will? What do you think causes, because we know the statistics, they're tragic, how many traders try and fail. What's the common denominator there?
Well, I think that unrealistic expectations seems to be the most popular or the biggest reason why a lot of traders, especially in the Forex market, fail. Because in the Forex market, traders are offered a significant amount of leverage, even with the reduction in leverage that the NFA and CFTC have imposed in the markets. You're still trading at 25 or 50 times leverage, which is significant. So that creates an image of exacerbated gains. And I think that is a huge red flag for people who are starting off, because with any market, may it be Forex or futures, and commodities and equities specifically, it's all about adding to the overall return of your portfolio. And I think that you should look at it as not any different than any other asset class.
Okay. Okay, so unrealistic expectations, that I would have to say that probably tops the list for me based on all the traders that I have worked with over the years. David, what about you? What do you think it is?
Well, so Kathy, are you saying that when I read those magazines that show the traders living those big high lifestyles with big cars and they're boating and fishing and skiing and all that stuff, that it really isn't maybe that good?
Well, I think what a lot of people have to realize is that not that it comes that all of this comes easier as your account size builds, right? And it's a lot harder when you're starting off with a small account size, because these traders may have boats and planes and miscellaneous
Already,
like that.
they already have those things. They didn't
Not
get those from trading.
necessarily-
We already own it. No, go ahead.
Yes, either they already own it, or they are, leveraging on friends and family money, and then, from there being able to trade, large amounts of capital, or maybe a prop trader for a small firm that, gives them capital to trade, so it's easier to make more money when you're using more money is what I'm trying to say. Whereas,
Sure.
If you're only starting with $10,000 or $20,000 account, you can't expect to blow it up to, $2 million in a year. It's just a matter of, what your starting base capital is. And, they may still be maintaining relatively healthy risk controls and risk management, but it's just that, they may be trading for a much larger base.
Yeah, I think a lot of the published materials about people making even your own books, Kathy, but you're highlighting some people that did extraordinarily well. A lot of that gets into people's minds, and they may feel that they can do that. Very few probably can. But I do like the idea, and we've talked about this on this program for many, many years, of just reasonable returns over time will outpace just about every kind of return there is, because if you can keep your reasonable return coming in, the other people may have very high peaks and very low valleys because they're more volatile and they're putting more up and so on. I like the idea of reasonable returns over time, and it really makes sense to trade that way. And once in a while, you of course are going to you're going to make a tremendously good, like your trade. Maybe this trade did very well for you on this British pound and Aussie. And once in a while, you're going to have a home run trade, and that's fine, and you put that to work. But you're not trying to get up every day and shoot for the stars. You're simply trying to add, just like you said, any asset class, you're simply trying to add to the overall return of a portfolio. And I like that viewpoint. That is much how we think and talk on this radio program.
Right. I absolutely agree. It's all about long-term survivability in the markets. It's not about having a few winners that you can't replicate over time.
Right. So I don't have to drive a really inexpensive car. I can still drive like a mid-level car. Would that be good? Something like that?
Yes, the Audi will be fine.
Audi would be good? All right. Okay.
There's such a low barrier to entry to trade futures or Forex. With futures, you can open an account and, call yourself a trader. And I'll never forget when David and I have known each other for a number of years. The radio program, we've been producing this show now for 8 years, coming up on our 9th year. And David has been with us 7 of those years, David? 7 of the 8?
It's at least 7 or 8, a long time. Time.
And the barrier to entry, you can get into a futures account for a couple $1,000s, and I think people get it in their mind that, well, since there's such a low barrier to entry, then it must be very easy to do, when in fact what I've found is that in all types of business, the lower the barrier to entry, the greater likelihood of failure, and the more expensive the entry fee to get into, like let's say a Subway franchise or a McDonald's franchise. Those are not cheap, but rarely do you see one fail. And I think that, and I believe, correct me if I'm wrong, the barrier to entry in Forex is even lower than futures. Is that correct?
Yes, it's extremely low because the capital that you need to start trading with is extremely low, and on top of that, you're given significant leverage, which is part of the problem. And then all of the tools like charts, as well as real-time news and various other things, are also provided, and education is provided a lot of times for free. But that also erodes the quality that you're getting. And I think it's a reflection of two things. It's a reflection of the growth of the market, but it's also a reflection of the the reduction of quality, I guess, because you're getting this information from so many different people, and you may not, unless you know who you are getting your information from, it may not be a reliable source. So that is why, I think that, a lot of people who are interested in the Forex market, should really do some good due diligence about, what type of information, what type of brokers that they want to trade with, because it's also a low barrier to entry for a lot of brokers. Not so much in the U.S. because the regulation is changing, but abroad you have so many bucket shop brokers, and so you need to be very careful about who you trade with.
Hey, Kathy, I have a quick question for you. We've talked a lot about the technical side and the fundamental side of markets, but each of us bring to the market a whole history, a whole story, a whole background, emotional compulsions, and other things that we take to the market. And I'd like to hear you speak a little bit about the emotional side of dealing with trading, the emotional side of dealing with large gain, the emotional side of dealing with loss, sometimes repeated, and so on. Would you speak a little bit about that?
Well, I think that's always a challenge that traders have, and myself included. The way I approach trading, especially, regardless whether I have a winner or a loss, is that I try to trade using techniques that I've used for years. And so the best way to explain it is that even if I have 3 losers, for example, I won't get too discouraged because it's a model that I've used for the past 6 years minimum. And as a result, I've built a certain confidence level in it. And it may have hit a snag during a certain market period, but
Sure.
It's the confidence in your technique that it will come back. And it's also understanding when it comes to your trading strategies what markets it should work well in, as well as which markets it should not work that won't work so well in. And on top of that, learning from every trade that you make, whether it basically adhered to the model and validated the model, or whether it is a sign that I should make a change. And so all of that continual evaluation process, I think, allows me to take a much more mechanical, less emotional approach to my trading.
I've noticed also for myself, I just want to make the comment that if the trade that just lost, if I followed all the rules that of my own understanding, if I put the trade on correctly and I didn't do anything that was outside of that realm, I'm much more apt to be okay with it than I am if I know that I did something I normally wouldn't do because I was so sure or so certain. But if I follow my rules, it's much more livable to deal with the downside of trading than it is if you know that privately know that you're sort of breaking rules and taking shots and shooting from the hip. Those losses are harder on people, I think, including myself, and that's one of the reasons why I would like to stay within my own parameters, and that makes me believe in the trade more. And even if the trade doesn't work out, I ultimately can live with that fact much better than I could if I had been shooting from the hip and taking a more wild approach because I was so certain of something, or whatever the reasoning was, if you follow.
Yeah, absolutely. I mean, it's just if you made a mistake and you just took a kind of ad hoc trade, you beat yourself up a lot more than when it's when you have a failed trade simply based because markets sometimes will be erratic and sometimes they'll do things that it's not supposed to do, and it's okay if you at least stick to your rules.
Yeah, exactly. No, that's good.
Mark Douglas, in his book Trading in the Zone, he talks a lot about learning to think in probabilities as a way of separating yourself and your emotions from your trading activities. Any thoughts on that, Kathy? Learning to think in
yeah, I'm a huge practitioner of high probability trading, and for example, not that past performance is indicative of future results, but in January we've had about 80% plus accuracy, and we try to maintain that. And I think having the probabilities on your side by in my trading, having fundamentals, technicals, and sentiment aligned with our trade helps to increase the probabilities of our trades working.
Now, when you're working on a strategy, what would you consider to be a minimum sample size to let you know if you're on the right track or you're headed down a dead end?
That depends on the time frame that you're trading. The shorter the time frame, the shorter the time frame, the fewer the sample set needs to be. The longer time frame, the larger the sample set needs to be, because you'll have fewer trades on a longer term basis than you would have a shorter term basis. But I think as a rule of thumb, as a general rule of thumb, I like to have a minimum of 50 trades. 50 trades to help me evaluate whether a strategy is good or bad.
Okay. All right. So 50. I think Mark in his book recommends that a minimum of 20. And so I just want people to understand, and I see this happen with traders, and it's literally heartbreaking, but they'll work really hard to put together a strategy. They'll burn the midnight oil, and man, they put a lot of work into this thing. And then they take 3 trades, the results are not what they expect, and they immediately go back to the drawing board attempting to reinvent the wheel. And I just want to encourage them, you have to give that thing, because we're not going to win every trade. And it's very difficult for people who come from professions, and I find that so many engineers, doctors, dentists, people who come from professions and careers, pilots. We have a high number of pilots, for some reason it seems, that are attracted to our company and our learning model. And you don't get a do-over as a pilot. When you land a plane, you got to get it right every time. When you're a surgeon, you have to get it right every time. And for a person to learn, David, how is it that you put it about being wrong, gracefully wrong? How do you word that?
Oh, yeah, you just have to learn to be gracefully and perfect. You have to learn how to be graciously and gracefully and perfect in the markets.
Okay.
Yeah.
And the other thing I was going to quote you on, David, earlier when I started to talk about that low barrier to entry, is that, you know, for a few $100s, maybe in Forex, or just a couple thousand in futures, a person can call themselves a trader. And I'll never forget 7 years ago, the first time I heard you say that just because you have money in an account somewhere does not make you a trader. And
right.
Boy, no truer words, I think, were ever spoken.
Well, I've also seen, and thank you for noting that, but I've also seen so many times, having been around the markets for a long time myself, that people tend to lose whatever amount of money they put up while they're learning. They end in the end. If you start out with a big account, you end up throwing a large amount of money away. If you start out with a small account, you end up going through a small amount. It's best to learn with small accounts. This is just our outlook, Kathy. It's best to learn with small account sizes. Let your own success determine your growth, and then go from there. Dwayne has a 2-year program in his school of teaching where, you know, over a period of time, I think it's 2 years, over a period of time, people would be growing up to a certain number of contracts, which in many cases, a person who is beginning with that number of contracts, he's going to wipe out his account because he doesn't know of all the details, all the emotionality, all the compulsions, and so on, that all of us have to deal with and find our right spot internally to deal with, because this really is very much an inner thing that we have to deal with ourselves and the markets and so on. So I think everybody ultimately who gets good at trading somehow has located internally a spot within them that they're very comfortable with, and that they kind of know who they are, you know, in relationship to the market and what they're looking for out of that market, and they're not easily swayed from that, either by hearing other people's large gains or by hearing somebody who tried a strategy that didn't work. They've really centered in, and they have the eye on their own ball, which I think ultimately is the sign of a mature trader, you know. So,
in your book, did you interview a gentleman by the name of Chuck Hayes?
We did.
Because one of the, I'm not familiar, apologize that I haven't read the book yet, but I do intend to. But apparently this listener has, and I guess Chuck ended up in a little bit of trouble at some point.
He did. Sorry about that. That was my trading app. But
No problem.
he did. And, unfortunately, sometimes people don't always reveal the truth in everything that they do. And it's, I mean, there's so many big names that you think are, reliable that end up, not being through the past few years, as we've seen. So, unfortunately, he seems to be one of those.
On CNBC, they have a program at night called Scoundrels or something, and I'm absolutely amazed at all of the folks who have started up these funds, and they're trading money for people, and they're not doing what they're supposed to do, or they're presenting phony records, basically doing a Bernie Madoff, but on a smaller scale. But yet, it's still very considerable sums of money, and when that show first came out and I saw a couple of 3 episodes, I figured, well, that's it. That well wasn't too deep, but yet they just keep bringing them out and bringing them out, and I'm amazed that people are so willing to hand over their money, sometimes to perfect strangers, and trust them to trade that. So I guess I'm only bringing that up as a cautionary tale, folks, to be careful. If you're going to hand your money to somebody to trade for you, if you're not ready to learn how to trade for yourself and manage your own money, simple due diligence apparently isn't enough, because otherwise we wouldn't have this TV show.
And, I want to add to that quickly,
Okay,
with one of the great things about, well, at least I hope, if you were interested in having someone manage your funds in the Forex market, that you can keep it with the broker. Basically, all you would be doing is, the broker, who hopefully is a little bit more compliant and follow the regulations and are regularly monitored by the CFTC and the NSA, that they would be less. You would have less of a chance of having someone run off with your money, because you're dealing with a large firm, and sometimes you'll be dealing with publicly traded firms. But in the Forex market, it's very common to have your money remain with the broker, so that these problems have a higher chance of being avoided.
The transparency has been a lot brighter now than it was back in the day. So it's very hard for that to happen. So like a lot of the platforms are, server-based, where you can see the action in real time. Like Kathy said, you got a relationship with the broker. So there's a lot of other things that are more transparent now than before. And the rules and regulations are really clamped down, because they are, knocking down some of the shady characters out there that are, coming out with crazy returns and that kind of stuff. And people just have to realize they got to use their gut or just common sense. If it's too good to be true, something's wrong.
Kathy, did you have a chance to meet Bert as you were being patched into the show earlier?
No,
Sorry,
I did not.
Okay, I know you just heard a strange voice pop in. This is Bert, who's been with us for a number of years and a co-host on the show, and our broker. Bert, Kathy, Bert.
Hey, hi, Kathy.
Good to be speaking to you.
Yeah, you too. But I just, that is always a touchy subject. And being on this side of the phone for 20 years and dealing with it, it's a sensitive thing, and I'm glad you guys talk about it. So.
Yeah.
Well, Kathy, listen, I have just want to say, I know you've spent a full hour with us. We know you're busy. You have your business and so on going on, but it's been really delightful to hear from you. You're very energetic and very youthful and full of enthusiasm and some wisdom, obviously, from having been around the markets for a long time. And I really have enjoyed listening to you speak and put your ideas together. And I'm delighted that we had the chance to have you on today.
And
thank you so much for inviting me.
Certainly hope we're going to be able to talk you into coming back.
Yeah, definitely. I mean, I had a great time, and I would be more than happy to return.
Okie doke. Then It's a date, and I'll send you an email, and we'll work out schedules and things, and we'll talk about it, and perhaps you and I will, chat offline and have a couple conversations, and we'll see what the future holds. How about that?
Sounds good. Well, have a great day, everyone.
Hey, thank you so much for
Kathy.
being on the show today, Kathy. We have really enjoyed it. Have a great afternoon.
See ya.
All right, David, did you want to take a quick run through the markets here?
Well, I just want to say that that was very enjoyable, listening to somebody who could pass for an 18-year-old voice on the phone talking market wisdom and having been around it for a long time, and with that enthusiasm. She's obviously very enthusiastic, has a great love and affection for all of this, and it really boils down to what we've talked about many times on the radio, that there's a love for the markets that is, I think, is necessary, a love for the whole machinery of it all and the whole stuffness of it, that is bigger than simply looking for gains. And there have been some people that have done very well that are just looking for gains, but I think she exemplifies on a number of levels that a love of the whole process is probably important to have. She clearly has that. She clearly enjoys mixing. Whether she was a pure fundamentalist or technical or a blend, it doesn't matter. But she has a love for the process. And, really, I think when she went into her foreign exchange section of JPMorgan and got a taste of, she said that I really connected with that. It all made sense to me. I've had a number of people in my life that have said that same thing to me, which is that when something suddenly makes sense to them, that's where they had their success. It just made sense to me. I've heard that many times. My great friend Greg Howe, who said, I just picked up the guitar and it just made sense to me. And, now he's a world-renowned guitarist. And I've heard this many times. And so when she said that she went to J.P. Morgan, that's my ears perked up. When she said, I just looked around, I saw the foreign exchange markets, and it just made sense to me. Well, that's not the first time I've heard that. And this is exactly where she landed. This is what she ended up doing. This is what she's rallied in her whole life. It just made sense to her. And some of us, myself included in this, it takes time to find out what suddenly just makes sense to you, in the markets, and what part.
Yeah, that's a big question that we always get from a new partner or student is, what market should I start with? Where should I begin? And what I encourage each new partner to do is to spend time in the simulator watching a variety of markets, the S&P, the Dow, the Russell, the NASDAQ, crude, gold. Spend time with each one of those markets and see if one of them doesn't in some kind of way speak to you or just sort of make sense. I think, yeah. Does it make sense?
It somehow connects.
Or resonate?
Yeah, something just resonates, and you suddenly go, I just get this, or something. And it took a long time. It takes a long time for some people to get to that point. But I've heard many people in my life who have been successful, who have their own success, make that exact comment that she made. Well, it just made sense to me. It just was easy for me, that kind of thing. And that's kind of a clue, perhaps, and it could, like what you just said, Dwayne, it could be you could be looking for years at the S&P and flip over to another market. It may be something as far away as natural gas, and suddenly go, this just makes sense to me. This market just means something. I get, whatever it is. Maybe, I don't know what it is. Maybe you have a background, or your parents had a background in something to do with the refinery, and you have some of that in your blood, or who knows what. But somehow it makes sense to you. Remember, if you find yourself saying that, that could be a very big clue that you're stepping in an area. Instead of looking for a challenge, something that doesn't really connect with you, why not look for what you might find very easy and go in that direction real hard? Because I think that's what she did, and I know others in my life who have done that, and they just had a big rally in their lives, as she has. With this, but isn't it funny? And I hope the list, not funny, but isn't it nice? Isn't it delightful to hear, the enthusiasm and the clear, love and affection she has for putting it all together and playing in that field and all that. And she clearly has a very good grasp on all of it and so on. There's something delightful about it all.
I agree.
Yeah.
I agree indeed.
I like
certainly a sweet trade she put on last night.
Yeah. No, absolutely. Absolutely. So yeah, I'm not sure I want to be up, but she has partner doing that, and we have clients as well that split the work up between the two of them. One will be on sleep shift that night, and the other one, and so on. So that is a relatively common thing we see because many people can't do it all themselves. And
David, I need to step away for just a moment.
Sure.
Entertain the troops, please.
I'll just entertain myself and hope that's entertaining enough to others that might be listening. Okay. No, I'd be happy to. Anyway, and it is, to me, when I hear somebody with the enthusiasm and the drive and so on that she has, it's just a nice remembrance of what we've probably all felt along the way, the enthusiasm for markets, and there's a lot of trouble and suffering we can save ourselves from by maybe getting more interested, perhaps if you're not already, in the process of trading, in the way it all works. For me, as an example, I really am more of a market researcher, or I'm not sure what the term would be, but I'm something more along those lines than I really am a trader per se, although we do trade and we love the idea that trading exists and so on. That was an area that got me interested, where I suddenly said, hey, I kind of can do this, with regard to researching new ideas. I think that's an area that maybe is a corollary from what she said for foreign currency. For her, that might be an area that I just found myself, over some period of time realizing, hey, I can do some of this. I think I feel like I've got some of this or whatever in the researching of new ideas and different ways to think or look about markets. And then I had, of course, you have to take that, and if you are interested in doing it, turning it into the trades and so on. But there's others, like our friend Michael Z, which we haven't had on the program in a long time, who, although they're very technically oriented, they actually found their love in, strangely enough, in trading in size. I mean, he really wanted to be big-sized trader. He wanted to manipulate large numbers of contracts in the market and be able to get in and out and do that. And he came up with a bunch of strategies to allow himself to do that and be able to live with the results, whatever they might be. And that really was easy for him. We've talked about him, how he grew from a very small, he's one of the examples that I would have, I mean, she doesn't know about him, but that would be somebody that you could put in a book, somebody who started out small and was able to work their way up to substantial gains. And he had some other income that had come into his life, and he used that to fortify even larger trading. But I'm pretty sure in his case that even without the influx of other money that had come to him, that he would have continued to grow his trading and so on. So there is that moment where you go, I kind of get this part is easy for me. Well, focus on that. She's a great example of it. There's many other great examples in my life of people who have said, I just thought this was easy, and now they're very successful at it. You kind of find that in your own life. If you find yourself saying, well, this was just easy. Others might have been struggling with it, but this was just easy for me, or it just made sense to me. Hook onto that. Don't discount that and go find yourself a mountain that you feel you can't climb and think of it as a challenge. Climb that mountain, the one that you just said, this comes easy to me. Go spend some time with that, because many successful people have made that same comment. So there you are, Dwayne.
There you are.
Well, you were hardly gone at all. I was just ramping up.
The nicest thing, because I was under the weather over the weekend, and my wife, as she had this thing too, we were not at church Sunday, and it was a flower delivery guy. The church sent us flowers. And that was just very, very nice of them. Yeah. So
well,
that's what it was.
That's very nice.
Yeah.
Well, I'll tell you what, I really enjoyed that. I got zipped up by hearing her. I could hear the enthusiasm and the little energy in her voice. She's a little firecracker, that girl. She's just...
Yes, and I'm going to work with her to see just how often we might be able to get her back on this radio program. At a minimum, I'd love to have her back once a week.
Yeah, I would assure her that she doesn't have to spend an hour with us, because I think she's busier
exactly.
than she...
Absolutely, yeah. If she could come, 15, 20 minutes at a shot, that would be great.
Yeah. With regard to today's markets, Dwayne, I'll have to save them for tomorrow, but I think we did. I think today's interview with her was a really nice way to spend some time. I'll be back tomorrow, of course, with you, and we'll go over the markets. There's a lot to talk about, especially over a 2-day period of what has happened and what's likely and so on. So, and I want to thank the audience for throwing some questions at her. It's great to get another person's input on, we're always talking about our particular viewpoints and so on, but there's so many other ways and so many other ideas that can be triggered by listening to other people speak, their ideas, their what struggles or what things they worked through and how they see things. That can really be helpful to trigger ideas in you and get you, the whole idea is to keep your eye on the ball, to be focused on something, even while you're not doing it. And when you do that, you really can change the nature of the outcome that you might believe would normally chase you, like, oh, it didn't work out because of this or that or whatever. Focus is a very important thing, and it doesn't mean just sitting in a corner burning on an idea. It means that you're bending every incident in your life to help prop up what it is that you're trying to accomplish. You're filtering out the stuff that isn't good, and you're taking in the stuff that is good, like a little flower opening up to the sun, something like that. And you're opening yourself up to the things that are really good. Those things can carry you quite a distance, and I've seen in my own life that is a very powerful thing, the idea of being focused, even when you're not doing the thing itself, that other part of your life, even if it's having lunch, you're still open to new ideas, open to new things, and letting those things that do come in help prop up the whole thing. You'd be surprised how far you can go, how much you can do, no matter what your history is, because your own history, when that's replayed and that's taken in, your own history often is the very thing that you unconsciously, unknowingly are perpetrating. You are actually sort of predicting and fulfilling your own history, and you want to stop that. Predicting and fulfilling your own history is very easy to do, and what we're talking about takes a little effort. So if it's too easy, you're probably just predicting and fulfilling your own history. That's, again, why people always say, I don't know why, but the same thing always happens to me. Mm-hmm. Well, I have a pretty good reason why that is. So, anyway.
If you use the same ingredients, you'll bake the same cake.
Yeah, something like that. Yeah. So I'll be back tomorrow, Dwayne.
Right,
thanks very much. Wonderful guest, and I'll see you guys tomorrow.
All right, man. Guys, I'll be around for a bit.
Thanks very much.
Sit tight, and David, we'll see you tomorrow.
See you tomorrow.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you.
Okay, let's take a look here at the market. I will be around for just a few more minutes, so if you have a question about any of the markets that we did not take a look at today, we'll be happy to pull it up here and take a peek. On the S&P 500 E-mini futures, as you know, if you've read through our blog or our Google Plus page or the Twitter or the Facebook, if you followed us in any way or even just listened to this radio program over the last few years, you know that one of our recurring themes is that important prices, important areas are almost always tested. And part of becoming a CFRN partner is learning to identify those important prices and important areas. And speaking of partners, a reminder to all partners that this week our partners meeting has been switched from Thursday night to Wednesday night. Okay? It's just a one-time thing. Michael has a thing. He has a thing. And so we didn't want to cancel on you guys, so we're just going to switch it to tomorrow night, 9 p.m. Eastern. When you got your email Monday morning with the weekly trading zones and the link to the trading room, the password, and all of that, I tried to make it big and bold and red to alert you to that fact. The link to the Partners Workshop is in that email, but you'll also get another email tomorrow afternoon at 5 p.m. Eastern, give or take. If you don't have it by 5:30 Eastern, email us support@cfrn.net. Of course, you can refer back to the email that you received Monday morning before the markets opened, but perhaps you've deleted it or you can't find it. Just let us know or call us 949-42-E-MINI, just like it sounds, 949-42-E-MINI. Now, about the important price, important area thing that I was just referring to, we said yesterday afternoon, consider being long, 45 to 47. If you wanted some more, confirmation, then you could roll it up a point, 46 to 48. That's 2 points, 8 ticks. That pays $100 per contract. Okay? And that is our goal, to teach each and every partner how to come in on a daily basis, sit down in front of their trading platform without a knot in their stomach to address the market, not with some weird I'm going to kick your butt today kind of a attitude or mentality, because I got to tell you, man, that's a fight you're going to lose again and again and again. We prefer to look at the market not as an adversary or enemy, but as our business partner. And the market is bigger. The market's pockets are deeper. Okay, and so we want to do what the market does. If the market wants to rally, hey, let's go. If the market wants to sell off, let's go. Okay. Now, I know that a sell-off or declining markets it's never a happy time when it has to do with an IRA or retirement account or long-term, investment accounts, that type of thing. But for the intraday E-mini futures trader, okay, whether the market's moving up or down doesn't matter. The key is simply that it's moving, right? We need volatility. We need the market to get up and go somewhere and do something, because then we have the opportunity to go along for the ride. And so the trade that went from 45 to 47, that if you look at the hourly, it went 1, 2, 3 times. If you break it down into smaller time frames, you might just see that it happened even more than 3 times. Remember, when I'm showing you an hourly candle, an awful lot happens inside of an hourly candle. There are 60 one-minute candles, 32-minute candles. You get the idea. If it's a volume chart you're looking at, there's no telling how many candles will be inside of that hourly candle, because it's based on volume, not time. The same is true of tick charts and range charts. There's no telling how many candles might be inside of that hourly candle. We are very much big believers in multiple time frames. Now, each morning in the live trading room, you will not see multiple time frames. That's something we talk more about during partners meetings, partners workshops on Thursday nights, which, as I just mentioned, tomorrow night is partners meeting this week. I always like to know where I am from a larger time frame perspective than where I am currently executing. Okay? If we're executing on the 4-tick range, I like to know where that is, where I stand in the grand scheme of things, whether I'm, on an hourly basis or a daily basis or a weekly basis. It's called, getting your bearings, knowing what the overall picture looks like. And in time, you learn to not only look at multiple time frames, but over time you develop an ability to think in multiple time frames. And when you learn to do that, that is a major milestone as you journey up Trader Mountain, learning to think in multiple time frames. Okay, let me go to the chat box and see if there are any questions. Oh, a reminder, as much as we enjoyed Kathy today, we have another special guest who will be with us Thursday at 1 p.m. Eastern. John, he is one of our very own, a CFRN partner. He will be here with us Thursday, 1 p.m. Eastern. And John, I hope, if we hit it off as well as we did with Kathy, hopefully John's going to be coming back on a regular, semi-regular basis. I certainly hope so. He wrote an article last week for Marketwatch, how about a 50% crash? He talks about the possibilities. I encourage you to read the article if you haven't read it already. Let me show you where you can go and get started with that. Go to CFRN.net, and when the home page loads, see right here where it says E-mini radio blog. Okay. Now, what you get here, this is a chronological order of past programs. Yes, I have been somewhat lax in getting shows updated of late, and you're probably tired of hearing me say that, and I keep telling you I'm going to do better, and I will. But what happens is once you get here, if you click View Recent Posts, okay, here's the bio on Kathy, and if you scroll down, here you go. Some information on John, and of course when you click the Read More button, what's it going to do? It's going to take you right to that article he just wrote. John writes for a number of different online publications. He trades primarily ETFs. That's his specialty. So we'll be talking about ETFs, among other things, when he comes on the show Thursday at 1 p.m. Eastern. You should be receiving an email here in the next, let's see, you'll probably tomorrow morning, Wednesday morning, you'll get the email reminding you that John will be with us on Thursday. Okay? And if you're in the audience today, because I know that John has notified some of his subscribers that he is going to be on the show this Thursday, some of you may be tuned in today, and so I would say to any of Kathy's followers or any of John's followers who are here on listening to the radio program today for the very first time, I just want to extend you a very special welcome. I hope you've enjoyed the day's show. We have been doing this now for, believe it or not, 8 years, creeping up on number 9. And you should just grab your calendar right now and and you should pencil us in from 12 noon to 2 p.m. every trading day until the cows come home. And I have no idea when they wander in, but you know, until the cows come home or Jesus comes back, whichever happens first. All right. I do have a request to take a look at the 6E, and so we will do exactly that. That is the euro. Now, unlike the currency pair that Kathy was trading last night, which was the British pound versus the Australian dollar, what we're looking at here is not a currency pair, but simply the currency itself, the euro, the 6E. This is the March contract. The one of our listeners, a member of the audience, longtime friend of this radio show, pointed out to us back last week that there was a megaphone pattern building in the euro, and those can be very difficult patterns to trade. This is on a daily chart. And basically, the megaphone, I've drawn the lines to help you, see, but you get a higher high, and then a lower low, and then a higher high, and then a lower low. A continuation of this pattern, of course, would be that we will then get a higher high, right? See how that works? It can, again, be difficult to trade. It's always, whenever you see a megaphone pattern building, and you can see this on a 1-minute chart just as quickly as you do on a daily chart, and in fact, you'll see it more often on smaller time frames than you will on a larger time frame like this. On the smaller time frames, if you're trading something 4-tick range, or maybe a 1-minute chart or 5-minute chart, and you recognize this pattern, it's best that you back away, trade a different market, or let that thing sort itself out. Okay? All right. Now, Knut, tell me specifically on the 6E if there's anything specific that I can help you with. Are you looking to get long? Are you looking to get short? Are you maybe already in a trade? Or do you just want to know what I think about it? Because I'll be happy to do any of those. In fact, I think what I'll do, because this chart's a little busy, let's go over here. Let's grab this. Let's clear it up. Let's get rid of everything. Let's turn this into a 6E. Okay. In fact, we'll go ahead and get rid of these as well, just for the moment, to give us a real clear price action only. This is a 15-minute chart. I won't leave it there, but markets are fractal in nature, and so what you see on the larger time frames, you're going to see on the smaller time frames, and vice versa. I noticed right away that on this 15-minute chart, it's easy to see that we have a little bit of a double bottom going on. Okay. We also have, if we come up to this swing high, we can draw a little trend line across the tops here. Okay. In fact, let's see if we have a channel going on. Control C, Control V. What I've done is I've created a trend line at the exact same angle. Okay. Yeah. Not what I would call a picture-perfect scenario there. I mean, there is a channel. We only have one touch here on the bottom. We've got 1, 2, 3 touches up on the top. So we're not going to spend too much time with the 15-minute chart. It's not something we work with normally. It might be a chart that you're accustomed to and that you work with. Let's go ahead and let's take this out to a daily chart for starters. Now, guys, did you see how my candles, when I switched to time frames, how the candles were all whacked out of shape? All I did was I came over to the price column and I double-clicked. That's sort of like a command to snap to attention. Everything just kind of lines up. There is a much more difficult way to straighten it out, but thanks to one of the partners who taught us that you could just come over here and double-click and it sorts itself out. Made our job a lot easier. I can't remember who originally taught us that little nifty trick, but thank you very much. Okay, let's grab our fib tool. Now, we do not use fibs as a standalone trading methodology. Tried that for a couple years, it just didn't work out. Okay. Once we decided to use it as an analytical tool and a confirmation tool, worked out pretty good. So, what we have on the daily chart from the swing low that was put in back on November 7th, down at 133, to the swing high that was put in on December 27th at a price of 138.92. Again, we've gone from 133 to 138.92. We had a 62% retracement off of that swing high. We then had a bounce, and now we're back struggling at that 62% retracement. You see how we overshot it on this day, and we bounced back, and here we are today, right at that 62% retracement. Okay. Now, this area right here, okay, from the low to the high, 62% retracement, we bounced, got back up to the 24, and that turned the market back down. Let's do this. Let's make those fibs go away. And let's go from this swing high to this swing low. Now, we'll go to this one in just a moment, but what I want you to do is to, use your imagination a little bit and just pretend that those days haven't happened yet, okay? We'll use the hard right edge of our chart. Remember, when we went from the low to the high, we established that we've pulled back to a 62% retracement twice. Now, when we do reverse fibs on this last leg, from the high to the low, what do we have? Again, a 62% retracement. Okay? Now, the 62 held and sent the market down to test this swing low. But now that we have more days and more data to work with, let's do that again. Let's go from the swing high to the swing low. Okay? Swing high to swing low. But we're not going to do that. Okay? Well, this is the entire move. Yeah, we can do this, but let me make sure you understand that this is the entire move from this swing high to this swing low. And so if the market rallies from here, we know that we can expect potential resistance at 135.74, and fibs are an area, okay? I know it prints an exact number on the chart, but I assure you it's an area. The next potential area for resistance would be here at 136. Hold on while I move this out of the way. 136.35. Above that, resistance at 136.84. And above that, which would be a 62% retracement from the swing low to the swing high, 137.34. So what this does is this gives us a really good idea from a daily perspective. And remember that the larger the time frame you're working with, the more important the data, the more important the numbers. I'm not saying you can't trade a smaller time frame, a 1 minute, a 5 minute, or a 4-tick range. All I'm saying is that from the big picture, you want to look at the big picture and then work your way down. Okay? That's how you learn to read the market, which ultimately leads to you learning how to trade. So we can make little marks on our chart. Put a little mark right there. Put a little mark right there. Because we're going to do something else here in just a minute. And just one more. Okay. So 24, 38, 50, 62. Got them all straight with that one, I think. How's that? It's pretty close to straight. All right. Now, I want to focus. This is the entire move, but I want to focus on just the last leg. Okay? We know what the entire move, we know where those areas for potential resistance are. So let's see where they are if we look at just the last leg. We'll go from the swing high here to the swing low there. Let me open this up a little bit so it's a little easier for you to see. Okay. Now, what I want you to take away from this, one of the things, when we looked at the entire move, these lines represent 24, 38, 50, 62. Now, just the last leg, I want to see where we have overlap. Okay? Notice that the 38 of just the last leg lines up with the 24 of the entire move. The 62% retracement of the last leg overlaps the 38% retracement of the entire move. So that makes these two levels right here stand out, and I give them a little more importance. It's called confluence or congruence, which I argued with somebody for a long time that really wasn't a word, but, you know, it is. And it pretty much means the same thing. All right. So if we get a rally going and we get long in this position and we're trading outside of just a 4-tick range, we're doing, you know, swing trading, whatever label you might want to give it. However you get yourself into a long trade, you can use this overlap here as A, a target, or B, an area to know that you need to potentially tighten up your stops, scale out of part of your position heading into that number, because there is a high probability. See, this, what I just showed you, is no secret. Many traders all over the world can do those fibs just like I did them. Okay, this isn't something that we cooked up. This is not a proprietary thing. And so when a large number of people understand a particular concept, we then have what I call self-fulfilling prophecies. So if you have a whole bunch of people waiting for price to get up here to this number so they can sell it off, what may happen is that those sellers who are sitting here waiting to take action, they could get eager, they could perhaps be afraid of being left behind, and they could come in early. So the point being is, if you're long coming up into this area, you want to be careful, because the selling might start before you actually hit the number. Okay? Now, if we clear this area, we can't ignore the 50% retracement of the last leg. That's very important. We don't have an overlapping fib there, okay? But a 50% retracement is always important, no matter what time frame you're on. Up here, where we have this 62 overlapping the 38 of the entire move, that's going to be an important number as well. Now that we've identified those important areas, we want to kind of look left and see what else might come into play. Okay? Here, price ran into some resistance. Take a horizontal. Well, I can't use my horizontal line tool because I have dedicated that to my weekly trading zones. So this is why I have to hand draw. Okay? But this is what I want you to see. All right. Created I think a reasonably straight line there. Price comes down, finds good support, bounces. As it comes back through, there's resistance. Finally, we break through. We come back. A little bit of support there, represented by that wick, but ultimately it gives way. Okay? Is this an incredibly important number? No. But I would want you to be aware of it if you're in a long trade, leaving the station here, looking to get to here. Okay? Just want you to be aware of it. All right. As we move higher, I want you to think about this candle here. Okay? Price at one point in time, this was just a big green bullish candle, headed for the sky. Okay, but sellers came in and pushed it down. All right. If we look further left, it's not the first time that happened. And if we go even further left, that area really seems to have some significance, because over here it was support. So let's do this. Let's just draw ourselves a little line across here, and across there, and across there, and look where we end up. Support, okay, resistance. Resistance does get broken there, but and it becomes resistance again. Keep in mind, these are daily candles. So when you have resistance at a particular area or support, that's important. Okay. In fact, this resistance pushes price all the way down to the swing low here of 135.06. Okay. This is not, in my opinion, quite as important as this one. This one, I would be very in tune with price action because you're getting through the 50, hitting the 62, which is also the 38 of the entire move, and it's proven itself to be a, I hope you can finish the statement for me. What is it? It is a important price, important area. Exactly. Okay? So we've got an important price, important area, which is also a 62% retracement of the last leg down on a daily chart, and a 38% retracement of the entire move. Okay? Very important area here, 136.40. I would jot that down. If you're a 6E trader, if you're a Euro trader, and you may be thinking to yourself, well, you know, price right now, it's way down at 135, is it 15? I don't see why I should be so concerned about 136.40. Well, and you don't need to be today. But there's nothing that can happen. Well, no, let me take that back. Okay. If we put in lower lows, then these fibs are going to change. Okay. Everything we've done has been based upon, even when we did the entire move, okay, and when we did just the last leg, we used the swing low here to bring it all together. If we take out this swing low, then we have to redo this whole scenario. And so as you make your notes, you might write 136.40 is important as potential resistance on the way up, as is 136.07, as is this number here, 135.75. You might make little notes to yourself as to, you know, the ones that overlap, why they overlap, and then of course you'll make a little note. This is all predicated that we do not put in a lower low. If we put in a lower low, then you'll simply, once you have some kind of confirmation that you found a bottom, and our confirmation here is this green candle. That's all the confirmation we have, that there is a potential bottom here. Whether it's a short-term bottom or a long-term bottom, we don't know. All we know is that once price got to a low of 134.76, buyers swooped in and ran it up to 135, well, 135.36. And then today they actually got it up to 135.39. All right? So again, the note you're writing should say, unless we break the low at 134.76, all these numbers are good. Doesn't matter if it takes hours, days, weeks, or even months for price to get up here. If there's no lower low put in here, this number here is very important. All right? Now, what about this? Okay, it's not an overlapping fib, but what else is it? Well, let's take a look. If we draw a line across here, we hit the top of that candle, we hit the top of that candle. High, daily high, daily high, daily high. We spiked above it, but we closed right at it. Okay, that's important. Okay, and it is the 50% retracement of the entire move down. That's important. Okay, so this is another number that you're going to want to write down. And again, because fibs are areas, you might be better served to do something like that. Okay? So we're going to need to look for some way to get ourselves long, if that's how we want to trade this market, knowing that each of these areas we've outlined and made notes on can be trade to targets and points for a potential reversal. Okay? Targets as well as potential reversals. So now that we know all of that, let's get rid of all this. It's gone. All that work's gone. I should have took a screenshot, but I can always draw them again. And the more times you draw them, the better you'll get at drawing them. Right? Just like with trend lines. You know, in the beginning, you're always, a little bit afraid that you're not going to get that trend line just right. Okay? And so just keep drawing them and drawing them and drawing them until it's second nature. And then you don't ever have to worry about it. So that was a daily. Let's go ahead and drop down to an hourly. Double click. See what I did? Double click. Everything pops to attention. All right. Okay. So hourly. Let's go from. Now remember, we were thinking because of what happened on the daily that we potentially have found a short-term bottom. How will we get ourselves long to trade up to those potential targets? Well, let's come right here to this swing low, and let's go right up to the swing high. Again, we've switched from a daily chart to an hourly. From this low to this swing high, we have found support already at the 24% retracement. Price drops any further. We've got the 38, we've got the 50, we've got the 62. Any of these numbers here that overlap the notes you made on your daily chart, right? More confluence, more congruence. Am I making you do some of this work yourself? Yes. Why? Because I want you to learn how to do it. Okay? The whole point, and I know that I'm doing this during the after show as part of the radio show, which is open to the general public. Of course, we go into more detail and spend more time on these types of subjects with partners, but in the sense of serving the greater, trading community at large, I want to give you an idea of some of the tools that you can put to work that are not gimmicks or gadgets or the latest thing to come down the pike. These are time-tested trading principles, okay? So, look here. Looks like it wants to come down. So, maybe we get support at this 135.11 area. Know what that number is? 135.11. Or is this going to be it? How do we know? I would, let's see, swing high here is 135.15. Price is going to rally up out of here. I'd want to see at least 135.20, and then I've only got 2 ticks to hit 22. So there's really nothing from here to here that I want to participate in. Okay? There's from this fib, 24% retracement, to the swing high, there's only 7 ticks there. So there's nothing for me. If I'm going to trade anything here, it has to be once we break above the previous swing high at 135.22. Now, let's do this. Let's shrink this up a little bit. And let's go from swing high. Oh, can't go there. Well, we could, but we won't. We want to go from this. This would be the entire move on the hourly. Okay? Well, let's just go from this basically last leg, retrace. Swing high to the swing low. I know that starts to look a little crowded, doesn't it? That's why sometimes you just take notes and make the other set go away. So what do we have overlapping here? Anything? These two. Confluence. What if we look left from here? I think that's worthy of this. Let's go like this. Oh, okay, I messed that up. Try it again. Here, because I'm left-handed, it'll be easier for me to do it this way. You probably didn't know I was left-handed. Yeah, me and Bill Clinton. Thanks. Okay. Let's stretch this thing across here. Now, it got a lot bigger than I wanted it to be. Now again, remember we have these 2 overlapping fibs here. All I want to do is I want to see what else happens if I go left. Well, price came down, spiked below it, but it held as support, 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 support. Finally broke through, but then look what happened right here. It still closed just below it, right? And it popped right back above it. So remember, we were looking for a way to get into this market long. Here's what I would like to see. I would like to see price sell off down to this area where I have dual fib confluence and an important price, important area. Do you see that? Let price come down. Be patient. Wait. Starts to firm up here. Starts to move higher based on those numbers that we made notes of off of that daily chart where we also had confluence and important prices and important areas. You see how we put these trades together? These bigger picture type trades. If it's something you want to learn more about, I encourage you to become a partner. Okay? As a partner, I can spend time with you in private go-to meetings. We do have a lot of partners, and time is limited, so we have to make appointments, we have to make arrangements. But between myself and Michael, and Bert, Leslie, there's 4 of us to go around, okay? We can work with you on these things. You might just, now, we established this as an important area, okay? But I'm not going to do, there's a terminology called just parking an order. In other words, you just come down here to like 135.08 and you just put in an order to buy on a limit. Well, what's wrong with that? Well, there's nothing really wrong with it, but what if, as price is coming down, you know, I don't know, some kind of news comes out, there's an economic report, and it just, you know, slams it. Remember, we got a double bottom happening across here on this hourly chart. Okay? Is that an important price in an important area? Uh-huh. Could price be actually coming back to test that? Yeah, it could. So my suggestion is that you be patient, allow price to come back to this area, see if it stalls and starts to rally, or if it just blows right through it. Because see, if you have an order here to just buy, to blindly buy on a limit, and price just blows through it, you gave away money for no reason. When you can be patient and wait and see what happens and take action then. But what if it happens when I'm asleep? Will there be another trade when you wake up? Okay. So, Canoe, I hope that helped. Let me see what other questions. Canoe had originally said, I'm looking to go long at 134.82. 134.82. Okay. All right. Let me shift back out to a daily, and I'll see if I see the significance of that, because I personally did not make the notes on those numbers. Now, look at my candles now, right here, double click, double left click, right there. Okay, so Canoe says he is interested in going long at 134.82. Let's find that. All right, there's 134.82. Well, pretty close. $134.81. Okay, so what you're doing is you want to see price pull back to test this little double bottom here on a daily chart, and you'd like to get long from here. That's a perfectly good idea. My suggestion was that perhaps the bottom is already in, but it may not be. And so price may decline, and you may have a very good opportunity to buy at this price. It's also possible that this level won't hold. So my my caution would be, if you want to buy 134.82, let price come down to 134.82, observe it, see how it behaves, see what happens, and then catch it on the way back out of town. As much as you want to get long at 134.82, let's say right now price just came down, and we got a new daily candle, and it started to rally. The spot I would like to get long would be as we break this high. If we come down, test these lows, start back up. Now, some will say, well, yeah, but you're going to miss all this. Well, okay. There's all different styles of trading. Okay. Now let's do one final thing, because as I just said, price might not hold. Okay. Let's go to Insert, Drawing Tools, Price Extension. Let's go from the swing high to the swing low. Grab this little guy, and we go over here to the swing high of this little rally we got going on. Now, this is based on prices not going any higher. Remember, we talked about how on that other chart that this is the bottom. If prices go lower, then we would have to redraw those numbers. Again, if prices go higher, we would need to redraw these numbers. But right now, if this double bottom does not hold and price decides to decline further, these are potential fib targets on the way down. 134.38 and 07, 133.76, 132.75. Let's scrunch this up a little bit. And let's go look over here at this swing low. See this swing low right here? Let's go from that swing low. Let's draw a line straight across. Look at that. Lines right up perfectly with that 50% retracement. Okay, not perfectly. Did I get that straight? So close. I'm going to leave it. All right, so there's that 50% retracement, and this is the swing low. So if price breaks the low here and starts to head lower, there is a 38% target here, but I'd really be watching this one. Okay. Now, if we look left off the 62, what about down here? Yeah, see, this is a big deal on a daily chart, and it's just above that price target. Okay. So again, on the pullback, that canoe is looking for to get long here at this double bottom on the daily chart. If the double bottom fails to hold and price continues to drop, these are your numbers on the downside. Now, they can be trade to targets, if you will, or potential points for reversal, however you want to look at it. And this here is an area. They're all areas. Okay? Very important to remember. Also, this swing high we've already talked about. If we go left, we can see why that's an important price, an important area, today's high. Okay? Okay. All right, I got to go. Got to get up. got to get out. And let me take a look one last time here in the chat box. Gary, I don't know. I don't know. I don't think so. Edwin, you're welcome. Edwin asked, do you have a recording archived where you review this topic with the partners? I'm at work, so I can't focus 100%, but would love to spend more time reviewing this topic. Yes, I have done a number of videos of this sort. You'll find those on our YouTube channel, youtube.com/CFRN. There's some there. In the partners area, I'm sure you'll find some there as well. But what we can do, if you'll remind me, Edwin, or if you'll email this in, okay, and say, hey, during the next partners meeting, could Dwayne walk us through some longer-term setups on Picture Market, and I'll be happy to do that. As you know, all partners meetings, and I've done this in plenty of partners meetings, but we can do one specifically for you so you know exactly which number it is. It's in a market that you have an interest in. And everything I just did, I'll do it during a partners workshop, you know. Because it can be a little bit lengthy, maybe we'll save it for the second half. And the other questions that can be answered rather quickly, we'll do them up front. And then we'll spend, 30, 45 minutes on this specifically. But you have to remind me, Edwin, you have to email in a request, or once the partners workshop starts, boom, 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 type it in, okay? Get your request in so that we can kind of plan the evening, okay? You're very welcome. I'm glad I could help. Sergio says, hey, Dwayne, are those audio Mind of a Trader recordings available now? Well, funny you should ask. While I was on the radio program today, I got a text message from Steve Croft, and he said, Dwayne, I've got them ready for you to go out and download. So I've got to go get them downloaded, and then I'll start putting out one each day for you guys. I'm going to put a few out at a time in the partners area, and then we're going to discuss those topics during each week's partners workshop. But to the general public, because I have 160 episodes, okay, and every one of them is just top quality. So I'm going to share one each day with the general public, or maybe one every 2 days. We'll see. I haven't totally finalized even the delivery, okay, so you'll have to bear with me there. But yes, they have all been edited properly, and I'll be downloading them today, and I'll be getting them up on the website here in one form, fashion, or another in the next couple days. Let's see. Good news is I have a waiting order at 134.82 with a 20-tick trailing stop on 2 contracts. Okay. My only concern there, Canoe, is what if price just blows through it? Now, a 20-tick stop in that market, 20 times 1250 equals 250 bucks times 2 contracts. That's $500. And I'm certainly not going to try to tell you how to trade, because I know you know how to trade. But I just want to suggest that another way to approach it is to wait and let price get down to 134.82, and see how price reacts. I mean, what if all of a sudden some news comes out and it just rips through 134.82 and just keeps dropping and dropping and dropping? You could have saved yourself from that misery by just waiting and putting your order on after it got there. And even if you just wait for it to, appear to be firming up and maybe just, starts to move a couple ticks higher, I mean, worst case, you cost yourself a couple ticks, but at least you know the market is moving in your direction. So, just something to think about. However you trade it, I certainly hope it will go well for you. Let's see. Thank you, Bob. You're very kind. Jay, you're very kind. Rick, you're very kind. Canoe took some screenshots, and I'll review them and let you know how this trade turns out, I promise. Thank you very, very much. And if you do that in the after show, whether it's today, later in the week, next week, I'll share them with the audience at the same time, and we'll be able to discuss them together. So that's great. Thank you so much for doing that. Pete, will you be downloading them into the members area today? Probably not. I overcommit myself all the time. I cheat my family every day by not spending enough time with them, and I've really got to try to fix that, So, but I will get them up there as quickly as I can, Pete. Jim says, if while building a house you run out of nails, would you stop building the house or would you get more nails? Well, I guess I would stop building the house until I got more nails. Now, I know you're making a point there, but it's late in the day and I'm tired, so can you break that down for me? I'm sure there's great wisdom in that. I mean, I can go ponder it if you want me to, or I could ask my friend Google. Seems like Google knows a lot about most things. Let me try that. I'm going to ask just to see what happens. Okay. If while building a house you run out of nails, would you stop building the house or would you get more nails? What? Let's try that again. If while building a house you run out of nails, oh now come on, give me a break. If while building a house, see, it's not playing fair. All right, I'm going to try that again. One more time, just for fun. If while building a house you run out of nails, would you stop building the house or would you get more nails? "15 things you never knew about your nails." If while building a house you run out of nails, would you stop building the house? Would you stop building the house? Or would you get more nails? Okay, so it's not like the riddle thing the other day. All right, so I'm gonna have to rely on you, Jim, to tell me the wisdom in that. Pete says if you run out of nails, use screws. Okay. All right, Jim. So you're going to make me ponder that. All right. Fair enough. Fair enough. Listen. Mary says if you're sure you will finish the house and have the money for the nails, then you buy more nails. Okay. All right. All right, guys, I do got to go. Thank you all so very much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.